Howdy. Thanks for coming to my Dion talk. See, this is why Dion needs to be here. I'm not nearly as good at that as he is. But anyway, super excited to have you guys here. Um, yes, I have less energy than I do on Sunday mornings because I've worked all day and I spend time with my kids, and they like to zap me for the last little bit I have. But anyway, super excited to be here with you guys tonight. As you know, we're doing this session because our good buddy, Dion McNeely from Dion Talk Financial Freedom, he is living his best life. I was teasing him and said, after your 2-month vacation down in Cape Coral, I understand that you wanted to make sure that you got a nice break in. So he was able to go back to work for about 4 weeks, but needed to make sure to get right back out on that vacation path again. And so now he's on an amazing cruise to Alaska. I've seen the videos and stuff that he's posted. We've texted a few times back and forth. I'm so pumped for him that they're having a great time, and that he's really enjoying the boat and seeing the sights and such. So awesome for him. I'm glad that he could get that well-deserved time away. It's been a while. But anyway, so we're here to talk about, landlording, all that other awesome stuff that we always like to talk about. I assume that you guys will bring amazing questions like you always do for Dion. And for those of you who don't know me, my name is Matt, aka the Lumberjack Landlord. Super excited to have you guys here tonight and talk about whatever questions you guys have. Happy to do it. We'll see. I really appreciate the fact that we've got 7 people and that 6 of them have already liked it. I appreciate the faith-based moment that the faith-based leap that you just made, is that you're expecting that whatever I'm going to cover tonight is of value to you. I don't think you're wrong. I think we'll crush it tonight. We'll give you lots of good information. So excited to have you all here, spend some time together. The one thing that I wanted to talk about, just kind of opening things up today, is certainly the market shifting. Rates for me are in the 6s. And it changes the math on the deals, right? So I talked to actually a deal that I'm working on tonight. I spoke with him probably a couple hours ago. The deal was under for about 600K. And it was under, but that was when it was 3.5%. And I just told him, I said, it was 3.5% when you were getting 600. I said, now it's 6.5%. I said, the math doesn't work anymore. I said, all the numbers are different and I'm not going to buy a garbage deal. And so we kind of laughed about it. And he's like, yeah, I know the rates change, this, that, and the other. He's like, but I don't have to sell it. And I said, yeah, I get it. Don't have to sell it. And I said, but I also don't have to buy it. So it was a good, just kind of back and forth with a guy that owns, a decent amount of property. He's a bigger landlord. And so, yeah, I think that you need to be not rude, but you do need to be somewhat matter of fact and understand that just because somebody had something under agreement, that market has passed. I know some guys that did amazing deals in March that they never get that same amount of money right now based on the cost of money. So one of the things that I really appreciate about Dion is he is very disciplined, and he's remained very disciplined. So that's been really awesome to watch. Because, I think that sometimes when you really want to grow, I think that sometimes you can get a little bit over your skis and you can sometimes get emotional. And this is not the business to get emotional, especially if you're a self-managing landlord. I always have to kind of take a breath, because a lot of times when people say something with the property, a little bit to take offense to it, because our properties are nice properties. And so if you're going through and you're nitpicking, like, okay, you signed the lease that says as is. And so I kind of have to take a little bit of a breath and say, okay, let me know what those issues are. We'll take a look at them. I'm not saying we're going to repair them or address them all, but any repairs will certainly be made. So that being said, I think that Dion did exactly the right thing in the deals that he was in, where the rates continue to go up. They've gone up even higher since then. And I'm excited when he gets back to know if those things are still on the market. Because I wouldn't be shocked if they still were. I actually, on another deal that I was working on, I actually double dog dared the owner to put it on the market. And I said, go ahead, I dare you to put it on the market. You're not going to get anywhere near that. So And there's no mystery of what's in my drink. I'll share what's in my drink. I'm a lightweight. So it's Fresca. But that's about as saucy as I'll get. So yeah, so I think you guys are doing the right thing. Be disciplined, stay smart, adjust your numbers, make sure that you're getting great yield. Don't do good deals right now. I'm telling you, I've had a lot of good deals come across my desk, a lot of good deals that I've worked with wholesalers on, and things like that. Also off market stuff, also MLS stuff. I've had a lot of good deals. Quite frankly, the good deals, they're good, but they're not great. And I only want to do great deals right now because I only have so much money. There's not an endless pit to that money, sadly. Now we can obviously replenish and monthly rents and monthly rent roll, and that's pretty good. So that gives us the ability to replenish quickly. However, I still want great deals. So in the end of this, let's talk about great deals. Let's talk about, so my experience, for those of you who don't know me, I'm a hands-on landlord. And until about a year ago, I did a lot of my repairs and emergency fixes and things like that. That was a way that, I kept track of it. And on an annualized basis, I saved myself between $10,000 and $15,000 just knowing how to do the emergency stuff. I highly recommend being able to do the emergency stuff. I think it's well worth its weight in gold, especially if you're a self-manager and you're investing locally. However, if you have brass balls like Millennial Mike and you like to invest afar, talk to Millennial Mike because he's far more brave than I am. But that being said, yeah, we'll talk about all sorts of stuff tonight. But yeah, ask your questions and I'll answer them best I can. And if I don't know, I'll tell you I don't know. And if you're a troll, I'll block you. But we can debate. You can have a different opinion. Different opinions don't bother me. But I've quickly adopted the saying, but I'm not going to jeer with you when you're sitting in the nosebleeds and you're not in the game. Don't need to. I'm here to help people that want help and are tired of making excuses and want to get a deal and get on the path to financial freedom. That's what I'm here for. And that's what we're going to do. So as you see people join, super excited to be with you guys. I love it. I'm so pumped to be doing this in Dion's slot. Yeah, so let's do this thing. So Dividend Dave, hello. Hey, good evening, Dividend Dave. I'm negotiating on my first deal, a duplex. I love it. I love duplexes. So I'm the dominator of the duplex. I love them. Out of my portfolio of 39 buildings, I think I have, it's my largest asset base is duplexes. I want to say I have 22 of them. I have 22 or 24 of them. I have a lot of duplexes. So super excited to talk about duplexes. I'm excited that you're in on a duplex. Always remember, take a breath, focus on the numbers, make sure that you've got good reserves in place and that you're not, being too aggressive with your numbers, and you'll end up with a great deal. So congratulations on getting this far. Negotiating a deal is a win. It really, truly is. So if you don't get the deal, the win is not just getting the deal. The win is being in the game, doing the work, and seeing that you're making progress, that you're learning. The presentation that you guys will see from me, the Lumberjack Landlord, you'll see that I've got a presentation that quite frankly is probably the most important video I've ever done. And that is, it's how I got my bank to create a product for me. Now, for smaller landlords, that's not really going to be a thing yet because you do definitely need to have a little bit of size to you to have that created. However, if you are of a little bit of size or there's planning to be a little bit of size, these are the conversations you'll be having with banks now. That way, when you start to get there, you can keep them on the path. Hey, progressing. Hey, progressing. Hey, progressing. Be in their ear. Be on top of it. Still continue to have those conversations with them. So yeah, it's good stuff. Keith Hager, Lord knows I love Landlord's Toolbox. Awesome. I appreciate that. If you're not sure what he's talking about, I'm talking a ton about the product reviews. And one of the most often requests that we got from folks was, please talk to me about what products you use, or what products you use, or how would you do this, or what are your thoughts on this? Not seeing the project with my own eyes, it's tough, but we actually have kind of a stable of products. I'd say 20 or 30 that we use consistently on all of our projects because they're just such good product. So we stick with those. And so I've been doing 2 a week, where every week I come out with 2 reviews, and then I provide all the links of where we buy them. And you can see that we buy them for the least expensive that they're available out there. But I kind of did that homework for you guys. That way it's just super simple. And then if it's a project that requires multiple parts or pieces, I put them all there. Like door locks, kitchen cabinet handles comes out tomorrow. Yesterday was a pipe cutting, or today was a pipe cutting tool. But there's all sorts of stuff in there that's really there for the self-managing landlord and for the people that want to do updates to their properties for as little money as possible. I always have the budget in mind. Trust me, I do. Keith Hager, howdy investors. Hey Keith, no code on. Hey Don, hello Matt and everyone. Hello everybody. PJ Gillespie, how good to see you. Howdy Lumberjack, good to be here. Tony Carr, how you doing? Good to see you. Mandy, howdy, there you are. Keith Hager, there you are. Yeah, here I am. I was literally responding to messages on YouTube before I jumped on the live stream. So you probably saw some things getting updated in some of those videos. I did 3 today with Mike from One Rental at a Time. They were a lot of fun. So yeah, always a good time with Mike. We have a blast. Actually, I think we did 4 today. I think we did 4. There were so many things he wanted to talk about, and I was like, yeah, let's do it. Laura Samaniego. A little bit of trouble with the tongue tonight. Good evening, everyone. Tony Carr, always value time with you, the amigos. Yeah, I love my brothers. They're awesome. They're fantastic. My much older brothers. Tony Carr, always value time with you, the amigos. Yes, thank you, sir. Oh, give me just 1 second here. So one of the rules that I have is that I am always going to look at my phone, because I have a lot of people that are side hustlers. So they work nights, they work weekends. And so I always want to make sure that I'm available to those guys, because if they're sitting there and they're waiting for an answer to a question, it's costing me money. So I want to keep them productive. So good times. Kip Stevens, SOS Properties. Let's get that money. Yeah, let's get that money. Oh, I love it. If you guys missed this live stream on Sunday, you guys saw my son Samuel. I've taught him this is cash flow. So the answer is, why do we buy properties? And the answer is to help people and to create cash flow. Skip Dell, good evening, Matt. Good evening, Skip. Clinton Roberts, sorry, slow on the 7th like. Clinton, what the heck? 25 likes, I appreciate you guys. Thanks so much. I know you're speaking in faith. I've covered some good stuff so far, but it's only going to get better. But guys, that's based on your questions. So this can be as unbelievable a session as possible, based on your questions. So if this isn't going well and you're not doing a good job, ask better questions. Let's see. Dawn, someone scooped in and snagged that duplex I was trying to get. Oh, Dawn, I'm sorry to hear that one, man. Yeah, I got snaked on that one last week. We did 3 videos about it. I was really pissed. Yeah, because I got played dirty pool with, but I'll find out what happened. Yeah, I'll find out what happened on that deal. Yeah, good time. Right, Andrew P. Let's go. Yeah, my man. Robert Farinelli. Hello, Matt. Hey, Robert. Good to see you. Sam Farho. Hello. Good to see you guys. Andrew P. Thanks for the intro on the first 15 minutes of your Sunday live. Gave it a listen regarding seller finance. Awesome. Yeah. So what Andrew's talking about is I do my live streams on Sunday at 11:30 a.m. Eastern time. One of the things that I've been talking about is I don't want to say that seller financing isn't going to happen, but I also want to have you guys consider a lot of people during a recession don't want to be a bank. They don't. And there's about 1,000 times the number of people doing seller financing this time around than there was last time around. And last time there might not even be equity. And last time it would be something that might be subject to or just go to foreclosure because the market tanked so badly. So I'm not saying again that there won't be seller financing. Of course there is. I've already done some. I'm going to do more. I was emotionally abusing a seller today, trying to get them to do seller-based financing. He's like, nope. I was like, are you sure? Nope. And then I had another deal that we were trying to do seller financing. He's like, absolutely not. Showed him all the math, showed him all the numbers. He's like, nope, don't care. I'm like, okay, pay taxes. Gave him all the numbers, showed him all the breakdowns, didn't care. Doesn't want to hold paper. So that's fine. And I asked, okay, so why? They're like, I don't think the economy is in very good shape and I don't want to be your bank. I get it. So I think there are going to be opportunities for seller-based financing. I don't think there's going to be nearly as many opportunities as people think. And that's why I think it's really important that you be having those conversations with your bank and really understanding what they're going to want. Keep in mind too, that I think non-QM rates are going to get a lot higher. I wouldn't be too surprised if non-QM rates are in the 9s by the end of the year, high 8s or the 9s by the end of the year. And that makes deals different. I'm not scared of an 8% or an 8.5% mortgage, but it does make the math very different, right? So just something else to keep in mind, keep in the back of your mind. Lumberjack Landlord said it. Could be wrong, been wrong before, will be wrong again, but I'm far more often I'm right than I am wrong. Robert Farinelli, I skipped eat out night to watch this, so it better be good. Real reason I'm broke, even though it's half off apps night. Robert, you're welcome. You're welcome. I'm happy to do this for you. Ray Drawn. Hey, Ray, never seen you before. Super excited to have you. What's up with new subscriber out here in Los Angeles investor? What's up? New subscriber. Sorry, I read it all one sentence. What's up? New subscriber out here in Los Angeles investor in duplex house hacking. Last property I bought was December 30th, 2021. Love it. Super pumped to have you here. Thanks for coming along and hanging out. Nisi Allison. Hello, glad I could catch this. Me too, Nisi. I know that Sundays are tough for you, so I'm like super excited to have you back and see you. Robert Farinelli, what's your experience with spraying oil and shellac? I am thinking of when I do doors, just brushing the shellac primer and spray painting series to fast and a pain to clean and a lot of money in alcohol clean. I never did that, but I'm sure my painters have. So I don't know that particular thing. Anytime it came to like specialty, anything like shellacking or any of that other stuff, I would always have my painters do it just because they know exactly the dry times, how thick the coat should be, if it should be sanded between coats. They know all that stuff cold. So for me, I can get in there and I can spend a half a day wasting my time on something like that. For me, I just talk to my painters and say, hey, go ahead and do it. So I only answer questions I know the answers to, and I don't know the best answer to that one. Julie Anderson. Hi, Matt. I'm so confused. Are you filling in for Dion? Yes, I am. Yep. I am. Yep. Today. Not today. Today. Yes, I am. I'm here. Less handsome, but here. Sam Farho. Is your introduction letter for inherited tenants only for new, only inherited tenants only, or for new tenants too? It's both. It's both. It's both. So we send that out to brand new tenants that are, the key is that they're new to us. They're new to us. So a brand new tenant wouldn't know any of those things. Like if it's a brand new, like we found them, we're placing them in the unit, they wouldn't know any of those things. We're the ones who are supposed to know those things because we've gone through our checklist. So I have a inherited tenant letter that I send, and that is based on us acquiring a property that we might not know the history, but that the tenant does. That's where that letter gets sent, Sam. So appreciate the clarification. Matthew Paris, howdy. Hey, Matthew, good to see you. Jay Hayes. Hey, Jay Hayes. Hey, Lumberjack. Cheers. Cheers to you, Jay. That's good. Oh, that's good. So good. Sam Farho. Yes, Julie. Nakodon, when did you do the product review on the digital card? I missed it. So Don, it's in the it's on a playlist. If you guys go to my channel, it's on a playlist, or you're on my channel. But if you go to my channel, it's on the playlist, and the playlist is Landlord product reviews. Everyone that I've done is in there. So far, we've done locks, we've done digital business card, we did pipe cutting tool. Cabinet handles is coming out tomorrow, our standard for cabinet handles, and we did lighting replacements, light replacements. Those are all there. So reviews for all those products that we use, they're all there and ready for you guys, and more coming. Peter Bedford, are there bathroom vanities you prefer, kitchen sinks and faucets? Yes, yes, and yes. You'll see we're doing a faucet one. The faucet one, I think, is next week for bathroom faucets and kitchen faucets. The vanities is it's almost nothing that Home Depot carries. Lowe's has a much better selection of good quality vanities. That's where I've seen the best. That's where I've seen the best so far. And a number of occasions I've done buying a kitchen cabinet, buying a cabinet box, and then putting a granite countertop on top of it. I actually hate that idea. I hate it. I've done it a few times. And when it's all said and done, install, countertop, slab, it's like $220 for the sink cut. It's usually a couple $100 for the stone. It's usually, $300 for the cabinet. It's then usually a couple $100 for the sink or for the faucet, and then another $100 or so for the sink. You're like $1,000 or $1,100 in. So doing the kitchen cabinet, the only way the kitchen cabinet one works, and this is really the only way the kitchen cabinet one works, is if you're using a cabinet from a kitchen to use as a vanity. Really, the only way that works is if you had a leftover cabinet, maybe you bought the cabinet, but if you can do it with a remnant slab piece, if you can cut the granite yourself, or if you can, I'm not telling you to do this, but I've done it, is using a wet hole saw or a wet saw to actually bore the hole in the granite, and then using an above sink bowl that then has a different type of faucet. Then you can do it. It looks pretty, and then you can do it on a discount. But that's a lot of ifs, and I'm not a huge fan of them because they do take up a lot of room, and they're just kind of weird and big. And so, yeah, I'm not a huge fan of those, but yeah, I will be covering faucets next week because we have, so kind of what's been fun about this project is we kind of keep track of what we have in the field for products. And we have, so we have 125 kitchen faucets that we've deployed. We have almost 200 bathroom faucets. I know I'm fun at parties, right? Yeah. Let's see. Larry Chong. Hey, Larry, good to see you. Patty Lumber Matt. Cool. Good enough. What is about duplexes that you love compared to other asset types in your portfolio? Larry Chong. Killer question, my friend. Good job. The reason I love those assets more than I love any other asset is because you can buy it with the same type of debt you can buy a single family home with. That's why. Yep. So I think it's crazy, especially in areas where duplexes are available, to buy a single family home, unless that single family home is awesome. Like it's like going to be like a long-term home for you. I think it's crazy because you can control the tenant that you're going to get next door, because you can make your criteria super strict. And so you can really largely control who you're going to get for a tenant because you're going to have a bunch of options to pick from. And I just have no problem sharing that party wall with somebody. I did it until I was in my 40s. I had just no problem with it. You know, we only moved out was because we started having babies. And so we didn't want to be that noise factor for the people next door. So I'd still be house hacking if we didn't have kids, because the only reason I have the house that I have is for the kids. And plenty of the duplexes that I have were large enough. They were 1,500 square feet per side. That was plenty big enough for a house. And in fact, if we had to go back into one of those, I wouldn't sweat it for a second. So the big motivator for me with a lot of things is the type of debt that I can get. So a duplex, I can get normal 30-year AM, 3.5% down debt, FHA. Once you go to 3s and 4s, there are some different rules there, as well as maybe having to go conventional, also having to go with a bigger down payment. You just see that fly buzz by me. So yeah, that's why the duplexes, and I just love them. And when housing does what it did, what you see is single family homes run up, right? So single family homes run up, and let's say it's in my area, the median home price is $440,000. Okay. And that's the median home price. That's typically a 3-bed, 2-bath, $440,000. Okay. A 3-bed, 2-bath duplex, 3-bed, 2-bath on each side. This is 440. 3-bed, 2-bath on each side is 500. So 440 over here or 500 over here. This is me identifying I have a much, 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 much more valuable asset in the duplex, value-based asset, because for that 3-bed, 2-bath house at $440,000 median price, my rent is $3,300. With a 6% rate, that's hard, right? It's not going to make a whole lot of money. With a 3.5% rate, yeah, it makes some money. But let's further continue. 440, 500, but I have 2 over here. So I live in one, or even if I rent one, but let's say I live in one and I rent out the other side. This might rent for 32 or 33. That side of the duplex rents for 27 or 28. So it's only a $500 discount to that of which a single family home rents for. That's why I love duplexes, is because when I move out of that duplex, I'm getting 28 times 2, and I only paid about a 10%, 12% premium for the asset over a single family home, but my return is massive. And I'm not relying on a single person or family to pay me. Mom loses her job, dad loses her job, somebody loses their job. They're probably in trouble. They're probably not going to be able to make the payment. When I go duplex, I've got 4 potential jobs, and in some cases it might be roommates. So I've got 3 jobs here and 3 jobs here. Now I've got 6 jobs. Even if numbers come in and unemployment's 10%, there's still a pretty good chance I still have 6 working people, right? So that's why duplex, and that's why I've built my portfolio, and why even bad deals for me make 20% on my money. Let me know if that answers the question. Hopefully I articulated that well. Keith Hager, just had a discussion with a tenant and my insurance agent. The answer on pools is a definite no. Yeah, I thought it would be. Yep, liability will not be covered. Yeah, no pools on a rental. No, heck no. Yep, no way, Jose. Yeah, not for me. Larry Weiss, thank you for the time and information. Much appreciated as always. Larry Weiss, you're very welcome. I appreciate you coming and hanging out with me. Julie Anderson, they accepted my offer for the 11 and a half acres. All right. Good for you, Julie. That's awesome. Now, the cool thing is, so lumber's down. So lumber got as high as $1,600 or $1,600 per 1,000 board feet. Right now, lumber's trading at just under, or was trading at just under $600. So it's $1,000 off where it was. It's basically, if we're doing the math, it's, about it's about 55%. So you're going to start to see less expensive 2x4s, and that type of mill lumber. So you'll start to see it. Only challenge right now is copper is still really, really, really high. And a lot of the components are still really high. Screws, things like that. So I'm still seeing a lot of inflation in those other materials. Sheetrock, that just went through another round of raises. I think since I had a job priced in December, I want to say it's been price adjusted 3 times. And they were all significant hikes. Like one was 4, one was 8, and then I think another one was 8. So material got a lot more expensive. But just be watching that, because I'm going through all my approvals now. I'm going through all of the, craziness of getting these approvals and, getting all the stamps done, all the different drawings and documents. I'm in the process of getting all that stuff done. And so in the interest of having all that stuff done, when the economy really starts to be in recession, we really start to see builders slow down and people canceling projects and builders not doing as much, there's going to be a ton of guys that have gotten in construction the last 2 or 3 years that aren't going to have enough to do, and they're going to be willing to work for a lower rate. And again, it's just, hey, it's not about taking advantage. It's really about being the port in the storm that's weathered the storm, that can make sure to at least put some food on these guys' tables. I did that for 3 companies. I was about 50% of their revenues for 3 years, 3 years back in 10, 11, and 12. And it meant a lot to me to help keep these guys busy. They were smaller companies and help keep them afloat. And yeah, it meant a lot to be able to be a part of that with them. And they were grateful for the work, even though it was reduced rate. And I was grateful for the good work, even though it was reduced, and, and able to pay reduced rate. So it worked out for everybody. So yeah, so congratulations, Julie. Keep that planning going. Like I said, that's going to be huge for you for sure. Let's see. Skip Dell. When buying properties under your trust, are there always programs for 30-year fixed debt available, or do you have to go to commercial? Skip Dell, great question. So until 6 months ago, there were 0 fixed debt options once you get over 10 mortgages, because those are the rules with Fannie and Freddie, and any bank wants to be able to resell that loan. Commercial paper is very different. A lot of times the banks will keep that commercial paper or the commercial loan. So for them, rates fluctuate at what they can borrow money for, et cetera. And that's why they have 3, 5, 7, 10-year debt with them. The longer the debt period, the higher the rate. And so for me, that's actually what I made a video about. Was I had gotten to my 10 units. I had satisfied the Fannie Freddie requirement. And at that point, everything that I bought had to be commercial. So I basically was shopping for another vendors or another bank that would say, hey, we'll do something with you. And so that's actually what my entire presentation is about, that we'll be posting tomorrow, which is how to get your bank to create a product for you. It's all the ins and outs, everything that I did in that process, working with my banker. She was absolutely amazing working with, and she's a vice president there, executive vice president there, working with their senior lender, everything, all the data that they needed to be able to vote on it as a board and literally create a product. This product, I worked with the bank to create for me. And now other people are able to leverage that product if you're in the New Hampshire or Massachusetts area. So yeah, that product is absolutely phenomenal. I don't know that any other banks have it. I know that there's some banks like JP Morgan Chase that has that, but the only way that you can get to that is if you're part of their wealthy or wealth management group that is, I think you need 8 figures plus to even get in that group, even have a conversation. So yeah, so to answer your question, Skip, it was not available. I had to go commercial until I got a bank to create something for me. The only other option is non-QM, but that debt is significantly more expensive. And I think non-QM debt will continue to get even more expensive faster than it will at even banks. So yeah. Matthew Paris, on my way to swap out wax ring on a unit. That's awesome. The wax ring. For those of you who don't know, the wax ring is what's underneath a toilet. That wax ring is what keeps water from getting in between the floorboards or dripping down into the ceiling below you or into the basement below you. So you got to undo the 2 bolts on the side of the toilet. You have to undo your water to the tank, shut it off first, undo the water to the tank, undo those bolts. Then you pop that thing off. I always recommend putting it onto a plastic. Well, first I would drain the tank in the back, but then you have to then put it on a plastic bag, scrape off any of the old wax ring that's on there. Then you get the old wax ring that's sitting there in the actual in the floor coupling. And then you just pull that piece out. Then you put your new one in, and then you have basically one chance to do a perfect lift and drop on to then squish that wax ring. So it then gives you a sealer on the bottom. Then you tighten everything down, reattach, turn on the water, fills back up the tank, and then you're done. There you go. You just got a 90-second tutorial on how to swap a toilet or how to swap a wax ring. Janelle Diaz, hey Matt, good to see you on Tuesday. I know, good to be here, right? You guys see me on Tuesdays on one rental at a time, but it's all recorded. But we do all that work usually on Tuesdays. So yeah, excited to be here with you guys. Dirk Sears, hey Dirk, I don't think we met before, but excited to have you here. Let's say you lost everything. Yep, you had to start all over from zero. Yep, but you are armed with the knowledge you have now. Yep, what's the first thing you do? Dirk, that's a killer question. The first thing that I do, it would depend on how I lost everything. And the reason I say that is if my credit were completely demolished, I would be looking, if it would depend on if it was bankruptcy. So if it were bankruptcy, you're much more limited, just because you're not going to get debt from a bank. You probably won't get debt from a hard money lender. And so that takes you down a different path. And then in that case, it would just be honestly, it'd be hustle, hustle, hustle. And I'd probably end up putting myself in a position where I would be hustling, looking for probably a 4 unit where if I still had my job, I could probably get 80% of the rents counted towards it. And then I would need a minimal deposit. I'd be shopping around trying to find out who would let me do a deal with a minimum deposit. I'd get something that needed a lot of work, and I would roll up the sleeves and get my tools out and start doing it all over again. I would start with a 4-plex, my cheat code to wealth, my 4-3-2-1 strategy. I would start with a quadplex. If I lost everything, I'd start with a quadplex. I'd get a fixer upper. I'd start fixing it through the units. And I think within 18 months, I'd be refinancing out of that, and I'd be going into my third one, or my second one, which would be a 3 unit. If I had to do all over again, I would do my exact 4-3-2-1 strategy. Without a doubt, that's exactly what I would do. Yep. My kids would be sharing a bedroom. We'd be in the smallest unit that we could live in the place, just because that's what it would take to be successful the fastest again. So that's what I would do. Great question. Robert Farinelli, regarding your talk about ARMs today, do you think in that 10 years they will have one shot to get out at 30-year money? I think over 10 years they will get one shot where the rate is lower. Yeah, I think so. Yeah, that's why I'm looking at, I'm not really doing 3 and 5 year debt anymore. I'm looking at 7 and 10, because I think that there is going to be a pocket in the 7 years where something will occur. It's still a gamble though. It's still a gamble. So I'm only buying deals like that are really, really good on cash flow. The problem is that what real risk is there if I'm buying a deal, and a 30-year fixed rate debt through a non-QM is 8 points. Like I can get my bank, I think it's 6. So I'll take 6 on 7-year debt and take the savings over the 8, and I can pay that down on the asset. And even if the asset's worth less, but I can continue to keep rents that or increase, that would be the game that I would play, that I'd feel comfortable with and I'd sleep well at night with. So I think that there's a pocket in 10 years. You know, you could be wrong though. It could be like the 70s, where the 70s, it was kind of 7-8%. And then early 80s, it was 13. That could happen. It's not out of the realm of possibility. That could happen. So for me, that would be something, because of the time horizon, that would be something that I would do, because I'd be more aggressive in pay down. Because what a lot of people don't talk about is rates might have gone 7 or 8% up to 13, but value still doubled because of wages. So that's what I would do. Joel C. Hey, Joel. Hi, Matt. Can you chat a little bit about how you deal with temperamental tenants? Ugh. Recently had a tenant screaming at me about coordinating maintenance. It took a lot to keep cool. Thanks. Yeah, I think that's a really good question. It's something that I'm not perfect at. You guys know, I'm not sensitive, but if you're being stupid, I'm gonna remind you that you're being stupid. And so with tenants, a lot of times they just want to kind of vent. And what's really funny is the bottler uppers, right? The ones where something's been a problem for like 3 weeks, but they haven't said a word to you. And then all of a sudden they call you and they pop off, or they send you a nasty text message. This is garbage. It's been going on for 3 weeks. You never told me. How can I fix anything or address your concerns if you didn't tell me for 3 weeks? So I think the best thing to do is, it's really disarming. If you've ever seen the movie Dinner with Schmucks with Steve Carell, if you've ever seen that, and Paul Rudd, if you've ever seen that movie, every single time somebody starts hitting him, he plays dead, because people just stop hitting things when they're dead. I think you take a lot of times they're just looking for a confrontation, and they're trying to justify their behavior, and they're trying to justify their response. So I think a lot of times it can just be very matter of fact. And I think you just keep your cool, take your breaths, and remind, put it in your system, in your notes system, even after the call, I'll send a text message and just say, hey, sorry, really frustrated about that. I appreciate you letting me know. I've reached out to maintenance, and I'll have an answer for you within the next 24 hours. If it's an emergency, then we're just there. But if it's not an emergency, then it's something that we always touch base with maintenance. And a lot of times we can move stuff around on maintenance if it is a bigger issue. So yeah, the best thing to do is just, like I said, just take a breath. Really, truly, just take a breath, let them vent. They're looking for a fight. And a lot of times it's not you that they're really fighting with. And they can be frustrated about something, but again, they're not going to own the fact that they didn't call you for 3 weeks. They're not going to own that. So why fight with them about it? Because then all the other stuff happens. They can justify not paying rent. They can justify, all sorts of goofy things. And I've had the city that I'm in called 2 or 3 times over my 18 years here. The city knows who I am as a landlord. They know that I treat my people right. They know that we do it on the up and up. They know that we pull permits when we're supposed to. They know that we treat our people right. So they're just kind of like, hey, we got a call. We got to go out there. I'm like, yeah, no problem. And they go out there, and they're smart. They're in a city where there's a lot of renters. You know what their first question is? Oh, were they on time on rent? Nope. Or have you had any issues with this tenant? And it's like, yeah, that was one of those things where she never told us, and all of a sudden she just kind of pops off, and here's my correspondence with my maintenance person already. This is something that's being addressed. Or a lot of times we're even addressing it, because it's not like the city runs out there in 5 minutes. They're like, yeah, we'll come take a look at it in a couple, 2-3 days. By that time, I've gotten it taken care of. So somebody did that. They thought that they were, being tough and smart, and they were going to get me. Nothing. We told them, we said, yeah, we've decided not to renew your lease. So they had to find another place to live that I know cost them more money and wasn't nearly as nice. So that's what I did. Let me know if that was helpful. Robert Farinelli still only doing 30-year money. Yeah, I mean, if I can, the problem is when you get to 34 mortgages, there aren't a lot of places that want to give you 30-year money, unless you're paying a ton of money for it. And I still have to be smart about how I deploy capital and what my return on that capital is. Matt Bittner. Hey, Matt Bittner. Do you expect 8% mortgage rates? Yeah, I do. Yep. I mean, I think for non-QM, I do. Yeah, for sure. For maybe commercial real estate, I think so, just because I think we're going to start to see some defaults on stuff. Only because you have a lot of stuff that's rate resetting. When they were buying stuff, 3 years ago, you could have rates in the threes on some commercial stuff, and now you're going to be going to 7. You're going to have some defaults, or you're going to have some people that the bank will look at it and say, you're not well enough capitalized based on your income on the property. So we're going to need you to write a check and pay down the loan this much in order for you to be in the reserves area again. That's what happens. So I fully expect that there's going to be people like that for sure. So yeah, great question. So I don't expect 8% necessarily for regular people. But for non-QM, yep, 8% for sure. Yep. And commercial likely will get to 8 by the end of the year. There's a chance. There is a chance that I don't know what that is on my cup. Sorry. There's a chance that we'll get to 8, but I think that with hikes, I think we could definitely get to 8 next year. I just think it's going to keep on slowing down the economy. And I think Mike and I talked about that today, which is basically brings ARMs to in the 6s. That's kind of where we were rate wise in like 07, 08. The problem is, those ARMs are being done a little bit differently. They're 5-year, 7-year, 10-year debt ARMs, not 1-year teaser rate ARMs. So it's a little bit different, but that kicks the can down the road for 5 years. But it does mean that there's not this massive price drop coming that's just guaranteed, or massive crash that's coming. That's what that means, because they're going to continue to create products to lower the cost of entry for people to get in. And that's going to still allow people to get in. It just is. And that means that so long as inventories don't skyrocket, back to, 3.5 or 4 million, that's the thing that I'm looking for most now is inventory explosion. I'm shopping in Vegas for a second home. And here's kind of the crazy thing is that I looked at a home that was put on the market, had $100,000 price reduction after a week. So it went from like 1.05 million to 950. That house sold 3.5 years ago for 550. So let's just say that the house takes another $100,000 price reduction. They're still making like 70% on their money, or 60% on their money. Still 60% they made on the house in 3 years or 4 years, right? So tell me that's a crash. It's not factually a crash. Now, the thing that I'm watching is what the last one traded for. So $1,050,000 down to 950, but the last one traded for 900. Does that one trade at 900? And then we're now flat on the 16.6 increase that we've had so far this year. Or does it trade for 850? And that means we're starting to give back the 16% that we grew this year. And now we're in the 7s, the 8s, the 9s, and we finished the year. I think we finished the year because we peaked at 16.6 for price increases this year, or for value increase this year. I think we're down by the end of the year, not negative, but down from 16.6. It wouldn't shock me if we were anywhere from that 8 to 12 range. That wouldn't shock me. But then we're on a downward trajectory. So then next year is when I think there's the much larger possibility that we print a negative number for the year. And again, I think that's more based on inventories. And my call is, I believe Q4, Q1, Q4 this year, Q1 next year, we're in recession. That's my belief, but we'll see. The key is that I don't care if any of that happens, if that makes sense. I really don't. If any of that happens, it makes no difference to me because I will still buy great deals that give me amazing cash flow. That's the thing. Oh my goodness. All right, I'm going to speed up answering some of these questions. Holy cow, I got far behind. Sorry, guys. I want to try and give a thoughtful answer every time I answer. Janelle, I'm in the process of purchasing my first duplex. Cool. Inheriting tenants on both sides. Cool. Wanted to rehab one side at a time, but found there is a dip on the bathroom floor adjacent to the party wall. Okay. What would your strategy be? Don't be in a rush to get rid of those tenants. I would make the introduction with my letter, my special introductory letter to tenants. And see, the first 3 months with any property, the only thing I do is repairs. So I don't do like a gut remodel and throw somebody out to do a gut remodel. I don't do that. I give it 3 months, see if I'm like them as the tenant, because you might have one of those two that you can't stand and it's brutal. And then at that point, you just let them know, hey, it's month to month. I'm giving you 30 days notice, depending on what your state allows, or it's 60 days notice because I'm going to rehab the unit. But I always take the next 90 days to introduce myself, make some of the repairs that I know I'm going to need to make if it's not part of the remodel. And then really assess what's going on with the building and the tenants. I think that anybody that just goes in immediately and just starts ripping things out, ripping people out, and I just, you can miss getting a generational tenant doing that. They might love it there. They might, there's all these different variables. So that's just my recommendation. I would not be, I wouldn't be rushing to get to those things yet. I would be looking to use my tenant letter, which basically, introduces yourself, tells them you're excited to be their landlord. If you have any of these issues, please report them immediately. If you don't have any of those issues, please let me know the last 2 or 3 things that you had been talking to the landlord that they haven't addressed or haven't fixed for you yet. Fix those, get goodwill, show them that you're a landlord that's present, show them that you're an operator, show them that you're working with them, show them that you care about the place, that you're going to manage your investment. And that might bring their level up of communication and that they're nice and easier to work with. And then if that's the case, then you can start to make a plan thereafter. If that's not the case and they don't respond well to that, then you know who needs to go. And then you start making the plans around, which unit you then rehab, but don't do it to rush and get rid of a bad tenant or a good tenant. I mean, let me know if that helps. Jenny. Hi, Matt. Hey, Jenny. Jenny's son wrestles and he happens to wrestle on Sunday mornings. So she doesn't get to come to my live streams very often anymore. So I'm glad that you're here. Hi, Jenny. And I think I saw your picture with your kids. Great picture. Great picture. Matt Bittner, Lumberjack Landlord. Rate hikes also affect corporate bond rates with likely to increase layoffs as corporations experience negative cash flow. Yeah, for sure. Totally agree. Yeah, and I think what's really funny is look at what the actual Fed funds rate is. It's 1.25. Rates are in the 6s. Delta. That's because QT. It's because the Fed's reducing their balance sheet. I don't think they're selling paper yet, but they're not buying all the paper anymore. So now people that are buying those bonds, guess what they want? They want a higher return. In order for them to get a higher return, it's a higher interest rate and they have to charge more. So yeah, I mean, there you go. So it isn't even rates that have driven all these massive increases. It's the government not buying. Sam Farrow, I feel so ashamed that it took me to never feel ashamed. There's no reason to. We all make mistakes in this game. I feel so ashamed that it took me so long to rent my house as I never thought of managing it myself and decided I will manage at the last minute. Happy to say that I signed my first lease today. Good for you, Sam. Good for you. People, even at, as humbly as I can say it, people even at my level with 117 units, guys, I still make mistakes. I share those mistakes. I make a lot fewer than I did then, because after you've done anything 3,000 times, you better make a lot fewer mistakes. And that's how many tenant years I have, over 3,000 tenant years. So I make a lot less mistakes because I self-manage. So I'm talking to these people. So I made a lot of mistakes in the beginning. Don't sweat it. Just do your best, learn from it, roll with it, and on to the next. Don't let it keep you up at night. We all make mistakes. And I still make mistakes now today. And don't ask me what the last one was I made, because I don't remember what it was. I'd have to think on it. Now I have to think about it. Don May, Julie, I'd love to hear more about your deal. Don May, yeah, cool. Yeah, Julie, drop it in the notes. I'll talk it. Robert Farinelli, just bought the digital card today. Let's see how it works. Which one did you get, Robert? Let me know. REI Stoners, damn, Dion, your beard came in so fast. I know, and not white. Right, buddy? Want to see a real magic trick? Thanks for that, REI. That was great. Robert Farinelli, another thing about duplexes, a lot of places such as Rocket Mortgage will lend to you owner-occ duplexes all day regardless if you own another, whereas they are skittish on 3 to 4s. Yeah, like I said, it's the debt structure and the fact that lenders will lend on duplexes. I don't know of any single family home, and there might be exceptions to the rule. I just don't know of them. I don't know of any mortgage company that will do a single family home that won't do a duplex. I know plenty that won't do 3s and 4s, even if they're owner-occs. Yep, they just don't have a great product for it. Is he real? I am real. Hey, thanks for all you do. I appreciate that. You're very welcome. I'm happy to be here and spend time with you guys. Hi, Matt. What's your criteria for your renters? The 3 easiest kind of criteria that I have is 680 credit score or above, 3x net income of the rent, and prove to me that you've paid your landlord the last 3 months and no, it's not going to be in cash. I want to see proof of payment, because I want to, and I asked the question beforehand. Cool. When's your lease over? Oh, July 1st. Okay. So you're basically, your rent's due on the 1st. And so you're giving your notice, blah, blah, blah. Yeah. They're like, yep. And then when I look at their payments, I see that they paid on the 14th, the 17th, and the 12th. Yeah. So they're going to pay me late all the time too. So that's something that if they have an awesome credit score, if they have the 3x of the net income, 3x net income of the 3x of the rent in net income, ta-da. Then, and it comes down to that payment piece, I will say something to them, but they still might be the most qualified tenant. And then I would just have the conversation. Hey, we do have late fees. And after the 3rd, our late fees kick in. So please make sure that you're on time, because if not, I will assess the late fees. And then we just kind of watch that as a process. Yeah. Tom Kine. Hey, all, there he is. Tom Kine. Tom Kine is one of the great men out there that is an American trucker. I appreciate you guys, because I have friends that are truckers, and I know exactly how hard you guys work, and I know exactly how important you are to what we do. So I appreciate you. Matt Bidner, first thing to do with a pool is fill it in with dirt. Yeah, true story. Yeah, and a rental, I would be doing that. Tom Kine, glad to have you on my drive. I'm happy to be here on your drive, Tom. I will try and keep it as entertaining as possible. LV, teach me. You took back a message. That's really going to bother me, but not today. See, that doesn't bother me at all. I'm good with that. Keith Hager, Julie Anderson, you go girl. That's right. So if you're here and you're new, we as a community, we enjoy and share in the joy of our group's wins. That's what we do. That's what we do. There are plenty of opportunities out there for all of us. If you don't think that there's opportunity out there, then you just aren't working hard enough to find it, and it might not be in your market, but we celebrate each other's wins. That's the right way to be. So congrats to Julie again, but yes, congrats to Keith as well for being a good team guy. Robert Farinelli at Larry Chong. He is right about price, real life example. Bought my duplex at 2-1, 2-1, 1.5, and 2-1 for 350, and a 15K seller credit, 400K single family home across the street, 4-bed, 2-bath, and another one under contract. Yeah, it's that return. Yes, Matt answered spot on. Thank you. Follow up. How do duplexes compare with triplexes and quads? Probably fewer available than duplexes. Yeah, so there's a lot of cities, Larry, that don't have quads and trips. There's a lot of them out there, which kind of bums me out. However, you can always start the cheat code develop with a duplex. Just be selective in the duplex and recognize that you're probably going to have to move out of that town or that area to get to another duplex, because Fannie Freddie, as the underwriters of a deal, they will look and they will challenge that. If you go from duplex to duplex, they'll say, why are you going to this other duplex? And you can't lie. You got to give legit reason. Because I got a really good deal and I'm going to make crazy returns with my 3.5% down mortgage. Can't say that. You have to be truthful, but you can justify it. So I went duplex. I did it 3 times, 4 times. Yeah, I went duplex. I was able to do that, but it was a huge pain in the backside. I had to massively justify why. And it was, this one has a yard. This one's closer to work. It has more bedrooms. It has more square footage. Because of what I'm getting rent on the other side, my payments drastically reduced. It depended on every single one of those deals. I had to justify why. And it had to be a reason I could get them to care about. So, and that's really on the underwriter. So you have to put them in a position where they can say yes. The challenging thing is there's plenty of people that get a no. There are. That's why it's really important if you can start at a quad and go 4, 3, 2, 1, then yeah, it's killer. One of my students that bought the quad, I think he did that a year ago now. We negotiated the hell out of that deal. He's put about $15,000 in. He lives there for free. He makes about $800 a month net. And the value, not that we track, but the value of that property is up about 20%. And he's 25 years old, owner of 4plex. Right now, he's still doing the work, still looking at tons of deals, saving, doing all the right things, all the things he should be. So he's doing all that great stuff. He'll be ready. He'll be ready when that triplex comes available. He'll be ready. So yeah, to answer your question, Larry, yeah, triplexes and quads are hard. There's a lot of cities that don't have them, or a lot of towns that don't have them. They're easier to find in the Northeast because lots and the requirements to build here are really hard because the Northeast doesn't have a ton of land near populated areas. And so they give you typically higher density, or you can get a variance to get higher density. LV, teach me. After nearly burning down my own home because I forgot to open chimney flue, decided not to authorize use of a fireplace at a rental. So that's a really good idea. One of the things to keep in mind too is if you tell your insurance that you have a chimney, an operating chimney, guess what happens? They either might not insure it, or your insurance rate can literally go up 50%. So for me, any building that I have that has a working chimney, it no longer works. It no longer works. We make it a decoration piece where we actually will put an insert in there or make it a decoration area, but we never, ever have a functioning fireplace in a unit when we give it over to a tenant, because we don't want the liability. Carbon monoxide, fire in the chimney, somebody falls asleep and one of the embers comes out and hits a rug. Just, yeah. Nope. Nope. That's a hard pass for me. Robert Finley, across the street for 300 duplex are well worth it. Yeah, exactly. Yep. 300, the 300 one is a 1 bed, 2 bath. Wow. Let's see. Andrew P. Matt, can you expand on the conversation with Zubra on why the ARM term might keep flat or slightly up? Not sure I totally followed the conversation today. Yeah, all good. So as mortgage rates continue to rise, as we continue to see a rise in those mortgage rates, you might see a 6, you're in the 6s now for a mortgage, and ARMs are in the 4s. If the Fed continues to raise rates and the market continues to see that and continues to need higher yield, and we get into mortgages in the 7s or in the 8s for investment properties, certainly I believe for non-QM and commercial, and then the ARM is in the 6s, then what ends up happening is even if it's a 5-year rate 5 years from now, that's going to tick to whatever it is, and that might be like prime +2. We don't know where things are going to be in 5 years. That could make that mortgage an 8% mortgage instead of a 6% mortgage. That's a massive adjustment. Or what if it's 9? We don't know. I have no idea what rates are going to be like in 3 years. If we go into a recession, that'll probably stop them from having to raise rates. But I think they're going to raise rates into a recession because Mike and I talked about it today in the video. Everybody thinks that in a recession is just GDP down for 2 quarters in a row. Technically, that's not correct. It's actually GDP negative 2 quarters in a row and job losses. So we're not, the Feds, what's their charter? Full employment. So if we are in negative GDP, which some people say is the only criteria for a recession, but we're negative GDP for 2 quarters in a row, let's say Q1 and now this one Q2, which we'll get those numbers in July. If we are there, but we're still adding 250 or 300,000 jobs or even 200,000 jobs, then technically we're not in a recession. But some people say recession, recession, recession. I told you. Recession, what's the word mean? It means to recess, it means to contract. Well, if GDP is down, but jobs are still growing, then there's something else going on there that doesn't, it's essentially the wheels, the teeth of a wheel like missing. So then you end up with this instead of this, right? So that's where I believe rates are going to be a challenge. I think they'll continue to be a challenge. I think they're going to continue to go up. And even as they raise, I think we're going up, 75 to 100 in July. I do. 75 to 100. Now, 75 brings us to 2, 100 brings us to 2.25. I think that's going to make the stock market go all kinds of pukey. I think that's going to make the mortgage market continue to go up. But I'm not sure if we see a negative print on GDP in Q2. I don't think we might, but I don't think so. But I don't think that that will take a little bit to kind of grab hold and kind of work through the system, because we'll see a bunch of deals close that are still in the 5s, high 5s. We'll still see houses closing in July and August with 5 rates on them. And so it just takes time. It just takes time to work through the process. I think a lot of people don't appreciate that. So that's just the process as I see it. Hopefully that helped, Andrew. Let me know. Larry Chong, also, do you know how most planning board department typically zone duplexes nestled within single family neighborhoods? Yeah, so usually you'll find that street, and again, it's different every state, but usually you'll find that street is zoned SFH DPH, SFH DFH. Yeah, usually it'll be zoned for single family or duplex. There are the rare neighborhoods that are zoned where they have different zone designations for different plots. There's also neighborhoods that have 1 to 4 allowed, or the ability to add an ADU. So that's where one of my best deals ever was a zoning deal. Yeah, actually, 2 of my best deals, 2 of my top 10 deals ever were zoning deals. One of them, I bought a 2,495 square foot single family home that no one had done the research on. They were being lazy. I bought the home. It was in disrepair. Paid $160,000 for it, which was an absolute steal. We moved on to that home. I had done the work and I found out that it was zoned where it could be a duplex. I also found out that 40 years ago, it was a duplex. I was able to turn it back into a duplex with no effort whatsoever because they didn't go to get approval to not have it be a duplex. They just took out a couple of doors and just used it and took out a kitchen on the second floor. I put it back to being a duplex. Was no variance, no code, no nothing, because it was allowed to be that. Somebody else had altered it. I put 35 grand into that. I was into it for 195. That building just appraised for 335. Yeah, I crushed. Totally crushed. Yeah, so it was an absolute, so that deal alone, 160 to 195. Now, here's the cool thing. Paid 160, put my deposit in. So I think it was 20%. So with closing costs, I think it was like another $5,000 or $6,000. So I was like $38,000 out of pocket. I had a mortgage for like 130. Well, then I put 35 into it. So I was like, I think all in, it was $70,000 out of pocket on the deal. When I refied it, it refied for 330. I got 70% loan to value. So it was like 99,000 bucks. So call it 100 grand. It was 230. Well, that means that I got a check that paid off the old mortgage, but let's say it was the 160, but it paid me all of my $70,000 back that was at 195. And I got another 35,000 bucks on top of that. That other 35,000 bucks I got on top of that was all pure profit, but it's because it's a loan, it's not taxable. So I pulled 35 grand out on my 70% LTV mortgage, put 35,000 bucks in my pocket because I'm an amazing project manager. Put that 35,000 bucks in my pocket, paid off basically put the money back in my pocket for the construction, put the money back in my pocket for the deposit. I am now $0 in the deal, $35,000 in my pocket. My monthly mortgage is, I think, 1,600, I think is my monthly mortgage there. And my monthly rents are 3,200. So I make $1,600 a month rent on that building. I have $0 into it. In fact, I was paid $35,000 to buy it. And the answer to your question, yes, I would do that deal every day. But yeah, that's what we're talking about. Those are the kind of numbers, those are kind of crazy things that we're talking about. And that was all based on zoning. That property was on the MLS for 6 weeks. 6 weeks. They had to keep on doing price reductions because the place needed work. And the work wasn't that bad. I spent 35, but I did above and beyond in that house. You could have fixed the problems that house had for about $5,000. Literally, 5 grand is all it was going to take to just make it right. It's 5 grand is all it's going to take. Cody Devers, howdy Dion, but not today. Well done, Cody. Cody Evers, hi Matt. When would you change realtors? Any specific warning signs to get you to move on and find a new one? Thanks for filling in. You're very welcome. I'm happy to fill in. This is a blast. If I found out that they lied, if you lied to me, I cut you off. I have no problem with mistakes being made. I don't like it. They upset me, especially the magnitude of the mistake. But people are human. But if you lie, you made the choice to mislead me. Yeah, you're just done. I wouldn't fire somebody if they've lost. I mean, we've lost deals, but I didn't, the agent is dynamically interacting with me from a strategy perspective. And so they're smart. They're smart. We work together. That way we're coming up with a solution together. And if it doesn't work, then, I always take it the next step further and do scenario analysis. Okay, if this doesn't work, then what do we do? Right. So, yeah, the big thing for me is just lying. If I caught you in a lie, I'm going to shred you. I'm going to fire you. And I'm going to make an example of you because I just have no tolerance for liars. What another day of live, January Kirkwood, another day of live stream. Yes, sir. Yeah. So, Dion's gone on vacation and we talked about it and I said, I'd be happy to fall, to fill in for him on a Tuesday night. So, and I told him I would go until the questions were done. And that's not a challenge to you guys. Demo a duplex today for my partner and me. Sore. Yep. Found old German beer in the drywall above a shower enclosure. 1920s. It looks very cool. Oh, you know what? I found these. I found these in a wall of a duplex that I demoed a few years ago. They're still sitting in my desk. They are the Bank of the United States $1,000 bills. And yes, I've looked them up and yes, they're basically fake. But yeah, that's what they look like. Sorry. Try and get my face out of the way here so it focuses. But yeah, that's what they look like. But yeah, these were found in a wall. Follow me on Instagram, Lumberjack Landlord on Instagram. You follow me on Instagram. I take pictures of cool stuff when we demo stuff. But yeah, I like finding cool stuff like that. We found papers from the 20s and 30s. Like we found some cool stuff. Nothing crazy valuable, but yeah, we found some cool stuff. Robert Farinelli, another thing on my 10-year arms is you have the time to pay down the principal. Still, you are right, a gamble. Yeah, so it's still a gamble, but to your point, that's why I'm saying, especially if you have a split, if you have a your margin delta or your margin between an 8% loan and a 6% loan on the arm, if you are disciplined, if you are doing the right thing over a 10-year period, take those 2 points that you saved yourself getting the arm, pay that down on the principal. So your payment is just like it was at the 8. And then you're probably not going to be disappointed at all when you get to the end of that 10 years. You're probably going to be in pretty awesome shape. That's where, the idea on the real estate side is time in the market is better than time-ing the market. That's where part of that phrase comes from and terminology comes from. This is Robert Fairnelly. So doing a 10-year arm, then refining to 30-year fixed debt could be a lower payment even if rates rise, but still gamble. Yep. Zuber is going to body slam me for talking about this. Probably you shouldn't talk about that. I won't tell him. Yeah, I mean, 30-year fixed rate debt, 40-year fixed rate debt. So Mike was against, he used to be against 40-year fixed rate debt from like Convoy Mortgage. He's not against it anymore. He understands it's money, right? And if that 40 years is what you need to get into it and it's going to create extra margin for you, it's not the worst, right? It really isn't. It's not the worst. So yeah, you just have to figure out what's right for you. The key is longer debt. Yeah, I mean, you're going to go like 12 years of paying and you're not going to touch principal. So that might suck a little bit. And so you really have to do the numbers and see what you feel comfortable with. Code errors. My plan is to do a 7-year arm in my next house hack. Ugh, I don't like arms, guys. I just don't. I mean, I like having them, but I don't like doing them. I think people get too aggressive with that stuff. And then if you want to grow, I don't like having a lot of capital not working for me. And that's basically what ends up happening, is that you keep your capital going, you keep putting your capital in the market, you keep getting it in on good spots, right? But yeah, that's just what scares me. Whatever I just said, I lost 6 people. Bye. just kidding. I did lose 6 people, but that's fine. Oh my gosh, 10 more. Oh, well, bye to you too. Martin sorry, Martin. Baldavinos. Hopefully I got close enough. Hi, Matt. Hi, Martin. What are the qualifications for an FHA loan? I purchased a home last year with a conventional loan, and I want to use an FHA loan to buy a multifamily property, the house hack. I love it. You're better off looking at like Matt, the mortgage guy, for FHA. So Matt, the mortgage guy is kind of part of the One Rental at a Time, Lumberjack Landlord, Dion Talk Financial Freedom. He's kind of part of our network of people that we talk to. Mike talks to him, I think, every Wednesday. But Matt, the mortgage guy, can tell you better what that is, FHA, as far as like the requirements. But yes, if you have a conventional loan in your first house, if you've been there, I think it's a year, you can then move out, use an FHA loan to buy the next house. The only challenge that you may have is if you're going from a single family to a duplex or a triplex. If you're trying to do that, then they are going to ask you questions why. So make sure that you're talking about that with your mortgage lender first and let them know what your intention is, because that might also be part of, them kind of prepping to say, make sure what you're looking for is this and meets this criteria in order for us to know that we're going to get a yes. So hopefully that helps you. Sam Farho, I have no intention of house hacking, wife rules. Yep. And not using an FHA loan. Would a duplex still be a better investment versus a tri or a four? It's asset dependent. It really depends on the asset. So I would just evaluate. So I don't treat things the same way that Zuber does, where if a single family house gets me a 10% return, but an apartment building gets me a 9% return. And if I have to pick a deal, I don't pick the single family with a 9% return. I pick the multifamily house with an 8% return, because it's 8% of a much greater number. And I believe that there's risk to a single family home that there isn't there in a threeplex, because I've got multiple people paying, multiple jobs. I like the security of and the support of multi-unit. Well, small multifamily units. So that's me. I don't run my spreadsheet the same way, but that's okay. Mike's found a way to make it work. He's awesome. I love it. Keith Hager, on an FHA 3.5 USDA 0 down loans, have you run into strict property quality standards? Yep. Yeah. FHA and USDA. I've never done a USDA loan. I did a number of FHAs. I will tell you that the worst loan for restrictions is VA. In my experience as a seller, not a buyer, as a seller, VA was brutal. And most agents know this. And so most agents will take another offer that's less, that's not a VA loan, because the VA appraisal or inspection process is extremely aggressive. They want a lot of stuff changed. A lot. LV Teach Me, hit the like button, please. Thank you, LV Teach Me. I appreciate that. Yeah, if I'm adding value and you guys think that I sound like I know what I'm talking about, then hit me with that like button. I appreciate that. Jenny, thanks. Jenny, you're welcome. Sam Farho, do you follow Patrick David? Yes, I do. Yep, he is calling for a 30% real estate price reduction in the next 6 to 12 months. That just shows me he doesn't know math. A lot of these guys are calling for that. Whatever. It's not, I've seen him. I think he's got the name of his channel right, Valuetainment. I think it's a combination of value and entertainment. Yeah, to each his own. Yeah, like I don't think he's a stupid guy. I think he's a smart guy. He's made plenty of money. I've built my businesses. I chose to take my business a different way than he chose to take his business. I could see some commercial stuff falling that much, but I don't think residential. I'd love to see the numbers that he has to back it up, because all the data, all the information, all my opinions are based on data points. and not one or three or even five. They're based on tons, like a dozen. And I'm in the market every single day. I can tell you a unit that we just posted. We had 80 inquiries over the weekend. Guys, like, does that ring 30% crash to you? Doesn't to me. So maybe, but I don't think so. Let's put it this way. I bet him just like I bet Ken McElroy. McElroy still hasn't paid me off. He owes me all of his properties. I bet all mine against all his. He didn't call me back. It's all right. Janelle Diaz, very helpful on the inheriting duplex tenants. Thank you, Matt. You're welcome. They are both under rented, so we'll feel them out for 60 to 90. Do required repairs, then binder strategy. Yes, because you might find, Janelle, that you don't love them. You might not love them. And if you don't love them, let them go. But I guess that would mean you do love them. Anyway. LV Teach Me. Sam Farho, yay, good for you. Yes, we celebrate each other's wins here. Thank you, LV Teach Me. Alec Lillibridge. Lillybridge. Hi, Alec. Good to see you. Is Dion on his northern exposure? Thanks for filling in. Yes, he is. Yep, we wish him all the best. I hope he's watching. I kind of know he's not. Makes me kind of want to say impish things. I think we've already covered some of those. But anyway, yeah, he's a good, he's I like Dion. I like the time that we kind of text through the week. So it's just good having those guys, to bounce stuff off of, make fun of, have them make fun of me. It's a good time. I like them. They're good guys. Robert Family, $15 Popple card. Yep. Yeah, you can. I mean, like I said, if you follow the link that I have in my video that I did, which is in the landlord, reviews, it's right on my channel. You follow the link there. I have one link up there that shows you all of the options that I think are decent, which is one's Retrieve, one of them's Popple, one of them's Link. But there's a bunch of options there. Kind of sail through, see what you think. But I have that link right there. It's available to you. Click on the link. You can see everything, all your options. I bought the much more expensive card, but it's because I have a brand and I have to, for me, I believe it's a write-off because of the brand and it's not just business use, but I don't know. For me, I just went with the, the branded card, and that's why it costs so much money. Jeremy Kirkwood, the white beard is a sign of wisdom. I would guess that you have a white beard then, Jeremy. I don't have a white beard, but I'm all right. LV Teach Me, Jeremy Kirkwood, demo work is physical work. Last week, demoed a property, solar heating pad. Yeah, true story. So how many properties can you have FHA today? Just one. Just one. They only allow one FHA loan. VA is a little bit different. You can actually get away with having a couple VAs. I think maybe even three, but FHA is only one. You're only going to have one FHA at a time, period. Bolo H. Good evening, Matt. How do you calculate yield? Is it the same as cash on cash? I can cover that. There, look on One Rental at a Time, or you can look on Dion's channel, look on One Rental at a Time, either one. There's a full video on yield. It would take me probably 10 minutes to cover as in-depth as I would want to cover it. And I think you're probably going to be better served by having it in a video that you watch a couple times. So One Rental at a Time, Dion Talk Financial Freedom, both of them cover that yield. It's not necessarily the same as cash on cash because I roll in, you roll in maintenance and other things like that, but take a look at it. And then I'm happy to answer questions if you watch it and then you come back, or if you watch on another device and then come back here. And I also calculate my yield a little bit differently because I look at the cash that I put into a deal, as far as like the deposit, the make ready, and I have like a baseline for maintenance, and then I have a baseline for water and sewer because I know what those are going to be. And then I figure out kind of what that monthly expense is going to be plus my monthly payment. And then that's what I know. Okay, this is what this is going to return kind of afterwards. Long convoluted answer. So watch their videos. They can give you better feedback than I can give you. But yeah, mine is when I'm getting right into a deal and I'm doing that very first, that down payment and make ready cost and closing costs. I kind of put all those together and then see when I put that into a deal, what's my monthly return on my capital going to be, which has to be my net of after my mortgage payment, after all of my expenses, kind of on a monthly basis, what that margin is between all of my expenses and the actual gross rents. So what my net rent is, I take that net rent, times it by 12, and then that's what my annualized total number is. And then you can figure out your yield from there. But yeah, watch the videos. Those are better. It gives a better explanation than me because I kind of have a proprietary personal way of how I figure it, because I don't take out for vacancy because I never have vacancies. Like I just don't have them. We're always, somebody moves out on the 30th, the next person moves out on the 1st. So I don't bank anything for vacancy. The bank does in their calculation of my loans, which I hate because it never happens, but whatever. Nisi Ellison, gotta go. Thanks for all the gems. Hit the like, folks. Thanks, Nisi. I appreciate that. Yeah, hit that like, folks. All right, let's see how far behind I got. Nisi, reteach me. Yes, I was thinking my insurance would go up. Yeah, it definitely does, for sure. Robert Finley, again, I'll push Rocket Mortgage because they seem to not care about moving duplex to duplex. They just hate 3 to 4, even FHA first time home buyer. I love Rocket Mortgage. I use them 2 or 3 times. There's a reason why they're the #1 large lender in the country. Their process is killer. It's absolutely killer. Gives you email reminders. They have reps that just call you and say, okay, wanted to make sure you saw the reminder. We have these 3 things. I loved my experience with Rocket Mortgage. It was awesome. Andrew P., thanks for the explanation on ARMs. You're welcome. I guess this is where I get tripped up. Are you saying a higher net inflow of folks using ARMs is likely? Yes, it's already happening. The market last year for ARMs was 2%. Now it's 10%. So it's up 500%. Even with the lessons learned from 08 and higher future rate. Yep. The difference is the teasers. Last time in 08, there were teasers. They were no income, no job, no problem, or no income, no job, no assets. That's a ninja loan. That's what they were called. They had teaser rates for 1 year or 2 years. They were called 2 and 28s or 1 year teasers, or Wachovia pick your payment for the first 2 years. Those products are gone. So what they have now is still 5-year ARMs. So it adjusts after 5 years, 7s and 10s. But the concern that we have is still just generally speaking as a product. So now the shortest one's 5 years. So the 1s and the 2s are gone as far as I've seen, but the 5 years, they still have that introductory kind of rate, but it is for 5 years. And so at that point, you're just rolling the dice, but you're rolling the dice with kind of more of a path to being able to be successful. But, you know, what happens if you buy it at 6 and rates are at, you know, it's prime +2 and your rate's at 9. And then you have to, let's say, refi it because the rates are at 9, your house isn't worth what you paid for it anymore. But you have some equity pay down. Like that's when you start to get sticky. And that's where a number of those will end up going through the foreclosure process. And so we'll see a bump on those because a higher percentage of ARMs always goes than 30-year fixed rate debt. Andrew P., thanks, Matt. You're welcome. LV Teach Me. Wow, Matt, great deal. I'm not sure what you mean, LV Teach Me. Which deal? Oh, probably the other one. Yeah. Yeah, it was. Tom Kind. Matt, it would be great to hear more people who have 1 or 2 rentals in their stories. Yeah, totally agree. I'm working on that. I have 3 people that we're just trying to get something on the schedule. One of them has 1. He has a 4-plex. One of them has 2. She has a 3 and a 4. And in fact, I gave her the lead for the 4. Sam Farho, do you have a waiver subrogation clause in your lease? Is there a concern with using this clause? Subrogation clause. I don't know. Explain to me what that is. It might be called something different in my state. So Sam, I want to answer your question. Let me know. Andrew Pete, Cody, look for realtors not named Lynn. Yeah, she only does business in one town. I think you'll be okay. LV, teach me. Lies are a deal breaker in any relationship for me. Never same again. Yeah, exactly. Yep. Especially, yeah, personal relationship for sure, but business relationship still kind of the same. Sam Farho, I really love the story of the single family house you flipped to a duplex after you found out it was zoned as a duplex. Wish to find one like that in my market. Yeah, just keep on looking. Any of the single family homes that come up, look and see what the zoning is, see what's allowed there. You know, if it's a bigger house, it might be something you can split up. If it's something that's an older home, it might have already been that. So you do have, there is the ability to find them. But again, keep in mind, you know, that was, I think I've done one other one like that. Yeah, I think I did one other deal like that. Yeah, I think I did one other deal like that. So they're hard to find. They are. Laura Sammy, but this is where I talk about being elite. I can more highly qualify and get deals like that because I know so much about what I'm working on that I do a deal like that. I do a deal where I can move a lot line and create and subdivide a house off of an ADU, things like that. And that's just comes from asking questions, doing research, learning, watching stuff online. That's where all that comes from. And so that's where I'm not looking for only a vanilla MLS deal, but I can take a vanilla MLS deal and I can turn it into a banana split. Or Samaniego. My duplex is in a zoning for a single house to multifamily, and based on lot size, you can add an ADU. Yeah, see, that's worth something. You get an ADU approved or you build it, like you can always run those numbers and see what it is. I'm going through the process now of getting those. I have like 3 or 4 projects. I want to get those all approved. And then within 2 years, I have to start that project. But I want to be building those during a recession when commodities are super low, labor isn't tight at all, and people are looking for jobs. That's when I want to do those because I'll be able to do that for much less money. And I'll still, if there's still demand for rents, then yeah, it makes sense, right? Sammy Farhow at LV Teach Me. Thank you. Yes, we celebrate our own wins. Daniel G86, are you flipping properties? I'm thinking of going after it in the Bay Area. I am not flipping properties because I think BRRR is the scariest and most dangerous strategy right now. I am not flipping anything. Yep, I'm not doing any flips. So no, everything that I have is the intention of buy and hold. And you'll actually see that in my presentation that I'm going to do in the video that I'm going to post for tomorrow. It's just a spectacular video where I take you guys, if I do say so myself, where I take you guys through exactly how I got the bank to create a product for me. And it's by not, part of it is by not taking risk like that. Banks are anti-risk. That's why they have underwriters. And so they not only want to see that you're not risking things in your portfolio, but that you're not generally taking these major leaps and major assumptions. Do you realize how many developers they go in front of these people and talk about these pro forma prices, and the prices are completely ridiculous and absurd, and they're never going to happen? Happens all the time. Flash of light. I'll ask Dion S question. What does the day job provide you that is delaying leaving? Health insurance, cash flow to pay the mortgage on your primary, alleviate boredom. Those are good questions. Delaying leaving. So I want to leave the company better than when I came into it. I think that I can do that. I have a couple other smaller things I have to accomplish. But once I accomplish those things, then I'll feel good that I'm leaving it in a better spot than when I got here. And then I think that kind of gives me the ability or the release to move on. Health insurance, even with everything that happened with Eliana, with my daughter this year, it was really just keeping in mind, how we needed to structure things when I did exit. So I won't say that it was concerning as much as it was needing to inform, understand, identify, go through the process. So now I feel really good about what our exit's going to be or what it's going to look like, the plan that we're going to have, the cost of it being budgeted for. So I've done all that stuff. So the health insurance thing doesn't scare me. It disappoints me that I have to pay. But I know that there's a lot of graphs out there that say my wife is an L&D nurse, labor and delivery nurse. And so the infant mortality rate thing, it's kind of like if there's the inside baseball says much different than what those charts say that these alleged experts put together that it's so bad in the US. I promise you, there's 1,000 reasons why the numbers are what they are in the US and they're justified. But long story short, because a big thing is like drug addicted babies, that's not that number isn't planning for that. And the nurse or the health system had nothing to do with the fact that the baby was delivered drug addicted. So that's like one thing out of that. So to answer your question on the health insurance side, nope, we're prepared. And and so yeah, so we're good there. Cash flow to pay the mortgage on your primary, that is not a problem. Alleviate boredom. No, I'm excited to get more involved because I've been working 80 hours a week. Yeah, I mean, I've been working 70, 80 hours a week and not really done a good job of taking vacations. And I'm ready for that. I have the job that I have because I can work from home. And so I get to see my kids literally hours every single day. And they're not just getting the shell of dad, like they're getting dad. And so I love that I get to see out and, go out and joke around with my kids during my lunch. And ask them how their day was going and what fun stuff they're going to do. And I love that stuff. And so Samuel's going to school this year. He's 4, and Bryn's going to be going to school this year for a couple of days a week, and she's 3. And so I'm excited for them to experience that. It'll be kind of quiet, only having the baby in the house, but yeah, not to alleviate boredom at all. I stay pretty busy. You guys are probably going to see a lot more content from me, not the Zuber level content, but you'll see more from me because I like being on my job sites and I like popping into my job sites, checking on contractors, making sure it's being done to the quality I expect. Thankfully, they've done a really good job. They send me pictures so I see it. That's what's happened the last 10 months. But I'm excited to be back in there and smelling these old 160-year-old houses. I've definitely missed it for sure. Hopefully that answers your question, Flash of Light. Robert Finley, so someone like me who only has 2 duplexes and doesn't plan to buy until next year and still has 8 Fannie Freddie loans left, you still recommend I just talk with a bank? Yeah, absolutely. You need to understand the 2 loans that you got, are they going to let you have more? And if so, what that process would be? What are the things? I mean, give them the assumption. If we are in recession? What does that typically look like for you guys when you're lending out money? What different steps would you have or need to take? I think that kind of narrows it down for you because there's some banks that, like, even through the the great health event of the last 2 years, some banks completely left investors high and dry, where your readjustment came in and they were just like, yeah, we want you to find another home for that loan. What? Okay. Is your bank that unhealthy? And that has to be the subsequent question. So yeah, those are the things that I look at. I still think it's worth talking to the bank. I think people that aren't talking to their local banks that are between like 5 and 10 locations that are between like $1 and $2 billion, I think you need to be making those local relationships. Their charter is to be in the community, for the community, of the community, in, of, and for, in the community, of the community, for the community. None of the national lenders give two what's about that. They want a bigger presence. They want a bigger book. Like, the local banks are in the community, for the community, of the community. Those are their local charters. That's the bank that I want to work with because they care about the transformation of the city that they're in. That's who I want to work with. And it's because they live in that city, So yeah, that's my take. Lone Soldier 89. Hello, Lone Soldier 89. We've not spoken before. It's a pleasure to meet you. Hello, Matt. What would be the best steps to take to turn an attic into a studio or an ADU? I have a duplex with a small attic. Most likely we'll have to change the roof or maybe add a wall. Thoughts? So first thing is you want to talk to the town because that likely might not be considered an ADU if you do it in your attic. That's because an additional auxiliary dwelling unit, it's a way. It's usually a separate building. If you just do it on the third floor, that might not be considered an ADU. It might be literally considered adding a unit, which then might put you out of code, so the big thing is just making sure you find that out first, before you start spending a bunch of time doing plans. Oh, interesting. That's a wholesale deal. So before you start doing those plans, I just wouldn't waste the money on that stuff. So I would talk to the town first, and give them an idea of what you're trying to accomplish, and then ask them, because every town's different. So I believe if you try and convert a third floor, like an attic, into another unit, A, you needed the permission. B, it's not going to be, it's a lot. Most states are not going to consider that an ADU. But I'm happy to answer additional questions. Like if that's something that is considered that where you are, I'll tell you all the construction stuff. Usually the idea is, you're going to want to, usually the rule is, so in my state, it's 35 feet from the ground to the peak of the roof. So it depends on how many feet you have there. But it might be lousy space, so you might always take a massive discount to it. But it might be great space because you're going to have knee walls and you're going to have the roof line coming into it. So it depends on what kind of roof line you have, how good. And then you can actually do what's called dormering the edge. Depending on the construction, you actually dormer the edge on each side of the roofs. And then you actually get more of a full space. But there's a lot of options. I mean, for a survey, you're probably looking at $3,000 to $5,000. For a set of drawings, you're probably looking at $5,000 to $7,000. So yeah, you could be, so talk to the town first, make sure you understand what the rules around the ADU are, and then you can start to make an investment down that path. Let me know if that helped, Lone Soldier 89. Togrin Hargrit, hi. How should someone build the legal structure of their business, separate LLCs for each rental asset, or one LLC holding multiple units? I have no idea. I don't do that. So the way that I have all mine, they're all in a trust. I have no LLCs. Ta-da. I don't have an LLC. I agree with Dion, Pearson the Vale. LLCs cost $500 to $1,000 to set up, but then you're paying tax returns on them every single year. They don't really give you the coverage that they believe that they give you. Trying to borrow with an LLC versus a trust, you're going to pay a premium in that LLC in almost every scenario. Not every scenario, but almost every scenario. So I don't have any of my stuff in an LLC. It's all in a trust. And then I just have insurance on each of the houses. And then I have an umbrella policy over that to make sure that if we hit the limit for some reason in the house, then the umbrella will kick in on top of that. Because that's really what the purpose of it is just making sure that you have, the ability to, sorry, one second. Well, Mandy, tell people that in the chat. Geez, Mandy, you say that all those awesome things, you don't put it in the chat. So yeah, so that's what I would do. So I don't do any LLCs, everything of mine's in a trust. Cody Evers, 3.5% for 7 years and only 10% down payment. No PMI, local credit unit. Rate max is only 8% as well and can only raise like 5%, 0.5 each year. Yeah. So again, debt structure is where it's at. And you have to make the decision if that's where you want to gamble. Because that's really what varies for everybody. Robert Finelli, the other thing with NH with single family home, I don't know if this is a Manchester thing, but the assessment per unit is less with more units. Yep, that's kind of across our board, my man, in the state. It's definitely they don't assess based on cash flow, thank God. And so yeah, you're much lower per unit in multis than you are in single family. Flash of light. Have you ever bought property that is a shed, especially that had a shed? I'm like, it's a shed? Okay, that had a shed, especially one in a so-so condition or worse. Did you demo and remove the shed or leave it? So what I did was, just to make sure that I can replace in kind, I actually would take pictures of it. I would take pictures of the measurements of it, and then I would probably replace it if it was in garbage shape. Yep. And then if they ever said, if the town ever came and complained and said, hey, you put a structure there, it's brand new and you didn't pull a permit. No. I bought a pre-built shed, put it here, and here's the picture of the old shed. It was no bigger than the footprint of that, and boom, there you go, done. That's what I've done, but it differs state to state. Robert Finelli, for some reason, the assessment value on my duplex is about the same assessment as the other single family homes. Yeah, that's awesome. Don't argue that point. It's because a lot of times that's the way they view it. And it's crazy and it's wrong, but they're not real estate investors. In this particular case, I'm glad my assessors aren't real estate investors. LV Teach Me, VA is very strict. I saw it as a buyer. Oh, thank you very much for your service. And yeah, LV, it's VA, I get it. Like really what they're trying to do. So for people that don't understand the motivation, the VA and that lending product, they're not just being difficult. They want to make sure that if you move in, that there are zero additional costs of things that you're going to have to take care of, because they're approving you based on what your monthly nut's going to be and what your monthly income is. Please keep that in mind. So they're doing it to try and protect you, but the protecting of you tends to get in the way and have the law of unintended consequences, but that's typically what you'll see. Robert Farinelli, and triplexes selling for $500K were just reassessed at $350 last year. My duplex in the ballpark on that assessment. Sure. Keith Hager, got a lead on the house going before sunset. See y'all later. Keith, go get it, my dude. Go get that thing. Well, at least put yourself in the game. Yiko. Hi, Yiko. Is it possible to buy land, place a camper at the land, and rent it out? Yes, all of those things are possible. The only thing you'll want to check on is zoning. So yes, you can do it, but yes, it comes down to zoning. So on something like that where I'm not sure, I just ask, because there's the possibility that the zoning won't allow for that, and then you're in trouble because then you bought the land and then you can't do it. Flash of light. At Daniel G86, there is a flipper that does Bay Area YouTube's video called Transform Real Estate that might give you some insight, but I don't like some of her remodels and flips. Interesting. LV Teach Me. Think you're right. Can have more than one VA loan at a time. Yeah, I know that's true. My lender keeps asking me to apply for new home, only purchased 2020. That's awesome. All right, friendly, because this is NH, do you think is a good idea when calculating yield to bump property taxes by 10% because of how cities and towns like to raise them? So I've not seen, you can, I mean, it just depends on how conservative you want to be. I've pretty consistently seen like 6%, 6 to 8. So you can do it 10 if you just want to be extra conservative, because I don't mind being extra conservative in that case. Also in H, with a sub 1% vacancy rate, anything more than a 5% vacancy is unrealistic. I just think 5 is absurd anyway. Like in New Hampshire, it's sub 1. In my portfolio, it's 0, and I can prove it. And so because of that, I hammer the bank on that. And they're just like, that's our standard. That's staying in there. It's not going to change. So I can't fight City Hall. If I want to borrow their money, I got to play by some of their rules. LV Teaching. Sounds like my experience with Veterans United Home Loans. Love their process. Easy. Constant contact with broker Jerry Landry. Awesome. Jerry Landry, we appreciate you and the work that you're doing for our veterans, my man. I appreciate it. I love it. I think that I think the VA loan is an awesome thing. I think it's awesome. I think it's awesome that we give them a chance to own a home with 0% down because they've put in the time. So I love that. Robert Finelli, speaking of housing stats, did you see the 73 affordability index? Yep. Yeah. So Robert Finelli, so we look at, so in our state, New Hampshire, we look at the affordability index. Our affordability index went to 73. I didn't talk about it with Mike today because he had topics he wanted to discuss, but it's probably going to be on my list for Friday. when we chat. But yeah, 73%. So what that basically means, a 73 in our state is that only 73% of the people making the median income can afford a median home. That means we are extremely unaffordable. We are extremely unaffordable in our state. So yeah, it's a problem for sure. Yeah, it's not good. LV, teach me. I have one rental, willing to share my story. Cool, LV. Yeah, I'll definitely shoot me an email, lumberjacklandlord@gmail. Would definitely love to connect with you and then try and find a way where we can get you in. Daniel G86. I have one or two rentals. Talk to me. Okay. Shoot me an email. Give me your stories and I'll try and set something up. Gotta love vanilla MLS banana splits. Yeah, true story. True story. I love value in deals and creating the value in deals. Guys, that's what makes you elite. Do you really think that there are deals? This is the mistake and the thing I think it's the most disgusting that bothers me the most about people that think that my market's like this super easy market to perform in. Do you really think that there's deals that show up on MLS that are a 20% return? Do you really think that? They aren't. They're that because I can make them that, because I know what to do to turn them into 20+% performing assets. So yeah, there's not this list of deals on MLS in New Hampshire that are 20% return on, 20% returns. There aren't. I have to create value there. I have to do something. Now, I still can calculate that 20% or over 20% based on what I'm going to put money into a property. But off of MLS, exactly as it sits, making 20%? No. Dear heavens. Yeah, literally be surprised how many people do that. Matt, the mortgage guy. Guys, we have a real celebrity in our presence. I'm ready to buy. Also ready to laugh at sellers when they counter. Bye, Felicia. Matt, the mortgage guy. Matt, I sent some people your way to check out your FHA videos because I think you do a phenomenal job. Matt does an amazing job, has an amazing team. I've done some collaborations with him. He's a lot of fun to work with. Even though he's in California, Sacramento area based, and I'm in New Hampshire. Still love it. Love learning about the market, seeing what he's seeing, because a lot of stuff that we see is also national. So really appreciate you, Matt. Appreciate all the awesome work that you do. Sammy Farho, a waiver of subrogation is an endorsement that prohibits an insurance carrier from recovering the money they paid on a claim from a negligent third party. I don't think that's in my lease, but I can double check it. I don't know. I have to check. So here's one of the brilliant things about my leases. It's written by a landlord tenant real estate attorney who also has 30 units. He lives this every single day. He's in court. He's doing evictions. He's doing services. He's doing all of these things around the businesses. He has clients that make me look like a rounding error. I use his lease. So the reason I do that, and I got it for free. The reason I do that is because I say, hey, here's the good news. If I have to do an eviction, you know how to fight your lease. And that's all that matters. So that way I can always call him and say, I got a question. This is what I'm going through. And he's like, oh yeah, it says it here in the lease that this blah, 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 blah. Okay, that's what that means. Yeah. He's like, and this is where this applies. Perfect. If I end up having to go through eviction, which I'm actually doing one next month, there's a hearing. Tenants toast. They have no leg to stand on, and he's going to eat them alive because they've done the wrong thing consistently. So yeah, that's how I got it done. But yeah, I have no idea what all that is. I don't know if it's in my lease, but I have the utmost confidence in my lease standing up in pretty much any situation. LV, teach me. I really enjoy your channel, Lumberjack. Thank you. Thank you for helping the small gal and guy. I'm happy to do it, you guys. I'm happy to do it. Heaven knows it was impossible for me to get any help. Dear God. In the beginning, it was a nightmare. Daniel G86. I just talked to a lender today that said I would need to move 100 miles if I wanted to go conventional or FHA because I own 2 properties already. I would be talking to a different lender. Matt, the mortgage guy, if you're still around, weigh in on that. Oh my goodness, Matt, the mortgage guy. Yeah. Matt, we can do a live too. I love Matt, the mortgage guy. I actually just really like working with him. He's funny. Matt, the mortgage guy, if you're still around, you can answer that question. I won't feel like you horned in 100 miles. If you wanted to go conventional FHA, yeah, that I can't imagine that's still the rule, or that's not a lender specific thing, just their inability to articulate exactly what you're doing. That's where a guy like Matt, the mortgage guy, is worth his weight in gold. He will be able to tell you, okay, here's some of the scenarios we need to watch out for. And these are some of the ideas that we'll be able to kind of get the underwriter to see our way, right? Yeah, I would talk. Yeah, Matt, the mortgage guy, if you can weigh in, if you're still here, that'd be awesome. Laura Samaniego, Matt, thanks so much for all you do. The tip about building the ADU during the recession, very much appreciated. If the numbers make sense, my goal is to build one in 1 to 2 years. Yep, I'm in contact with the town already. Laura, you're crushing it. You're dialed in. Keep up the good work. I love seeing you on a bunch of these live streams because it's knowledge, it's knowledge, it's knowledge. Keep on pouring that knowledge in. It's worth it. You're doing a great job. Congratulations. Sam Farho, a waiver of subrogation is a two-way agreement in which each party agrees to give up subrogation rights against the other. In the event of some kind of loss, such as damage to the building or personal possessions from a fire, it is good for both landlord and tenant. So what I have in mind, thank you, Sam, for explaining that to me. There's maybe something in there, but we actually tell them you must have renters insurance. Yeah, you must have renters. And you must list us. So that's in there. So I don't know that would need that statement, but maybe we do. But yeah, I that's how I believe my guy handles it in the lease. A little dry there. Sorry, guys. Still getting over that wicked razor throat that I had this weekend. Man, that was awful. Yiko, I'm thinking of buying land after that, park a camper, rent out the camper like a mobile home. Is that even possible? It is possible. It all depends on the zoning, Yiko. It also depends on the zoning. Keith Hager, back from look to see a FSBO new house in B neighborhood. It is now the most expensive house in the neighborhood. Oh, yeah, that's not good, right? We don't like to see that. All right, Fernelli, sounds like I'm going to have fun convincing a lender to get another duplex with my own OCC money, unless I find one in Derry or Auburn or something. I don't think so. I think you can still do Manchester because there's different parts of Manchester, and with the 5 or 6 different parts of Manchester, you can say, I'm moving to a much nicer neighborhood, or I'm moving to one that puts me closer to work, or just talk with a mortgage lender, one that understands what the underwriter is going to be looking for, and one that the underwriter understands exactly what the FHA and conventional rules are. I'm telling you guys, I did it 4 times, and the houses were not that markedly different. They were a little bit, larger of a lot, a little bit different of a town. School districts, hey, we're considering having, we're in the process of, trying to start our family. This is a much better school district. I don't know if the rules have just tightened that much, but that was 8 years ago for us. So it wasn't that long ago. I don't know if the rules have changed that much. Robert Finelli, is the duplex to duplex thing FHA or only does conventional apply to it? Both. It was both. FHA for the first one, refied out, FHA again. Couldn't refi or refied it, but refied it with the FHA. But the next one, I think conventional, and the next one, I think conventional, if I remember. That was like 10. Yeah, that was 11, 10, 8, and 7 years ago, I think. Yeah. Matt, the mortgage guy. I had a seller forget we are in changing market and counter my offer. On to the next one. Exactly. Matt, the mortgage guy. Thanks, brother, for the endorsement. Let's do live in a couple weeks. Yes, you got it, my man. For conventional, no way you have to move. See, dude, my bro. This Matt, the mortgage guy, right from a lender's mouth. No way you have to move. See? There you go. Matt, how can I email you to share my story about starting out? Lumberjacklandlord@gmail.com. 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 Daniel G, Matt the mortgage guy. How do I get around the FHA 100-mile rule? I own 2 houses, haven't used an FHA loan yet. If you have no FHA loans, you can buy with FHA anywhere. They just want to know why you are moving from the current primary to the new one. I moved 3 doors down across the street. My reason, the freeway is too loud. True story. This is it, guys. This is what I'm telling you. The 4 times that I did that, the excuse didn't have to be that crazy. School zones, lawn, better parking, bigger unit, more bedrooms. We had like 3 or 4 reasons every single time. They were real, they were true, and it was what got us the move. So yeah, love it. Yeah. Matt the mortgage guy. Love it. Love it. Amanda Turner. Hey, Amanda, how do rental comps for single family with the same specs as a unit in a triplex or a quadplex compare? If all else is the same, should I assume a certain percentage lower rent? You got to do something called the rent box. If you're in Mike Zuber's One Rental at a Time course and you understand the buy box, I have the equivalent of that from a rent box perspective. You chart everything the same way. You're looking everything up online the same way. Pick the areas where you see the most rentals for your area. You chart it out. What I have found in my area is that there's only about a 10% discount. It's only about 10% going from a house to a duplex unit, as an example. Quad or triplex and quad, it might be 20 to 25%, maybe 30%, but it's because it's tough to get a building with like a 3-bedroom, 2-bath house and have a triplex with 3 bedrooms and 2 baths, right? That can be a challenge. Yes. So Dividend Dave, I would only buy single family for renting by the room or short-term rentals. Yeah, Dividend Dave, that just matters where you live, because in my city, they don't allow that. Anything in the town next door to me, anything more than 3 people unrelated in the same house, anything more than 3 people unrelated in the same house, the city, if they find out, they can serve you a 7-day eviction notice. That's number 1. Number 2 is my town doesn't allow for rent by the room unless you're in a place that's zoned for it. Lone Soldier, thanks for pointing me on the right direction, Matt. I have a lot of research to do, but I want to do something with my attic. Yeah, I'm with you. Yep, would separate the attic and entryway from the house and make it an ADU. No, because it's in the same structure. Probably not. Again, your state might have different rules, but mine is it actually an auxiliary dwelling unit, separate auxiliary additional dwelling unit. So it's a separate unit. So just giving it a different exterior access point probably doesn't, but those are the right questions to be asking. And you definitely want to be asking your city. Yep. Those are you're heading Lone Soldier, you're heading down the right path. You're doing all the right stuff. Having those questions with those guys will get you in the right spot for sure. Matt the mortgage guy, if you have no FHA loans, you can buy an FHA loan anywhere. They just want to know why you're moving from the current primary to the new one. I moved 3 doors down across the street. My reason, the freeway was too loud. True story. Like Matt says, with a good enough reason, you can do it over and over again. True story. Santi, you have a question. I am here for you, Santi. Matt the mortgage guy, bigger house, nicer neighborhood, closer to the family, closer to work, basically a letter you put in file to explain. Exactly. Yep. And like I said, I did it 4 times. That was a huge part. That was a huge part for me being able to house hack. We went from the first one was, we went from a single family, which is really hard to do, a single family to a duplex, but it was 30 minutes away. It was closer to my wife's family. it, and that was, I think that was based, oh, it was closer to her work. Those are the three reasons. That was a 3-bed, 1-bath. We then moved 3 streets away because we moved into something that was a 4-bed, 2-bath. It's bigger. It gives us more of the space that we need. It actually puts us even that much closer to her work. Those are, I think, the 3 reasons for that one. The next one that we moved to, well, it's got a much larger yard. It's a 5-bedroom, 1.5 bath. And it has more available off-street parking where we don't have to park any of our cars on the street. And thus have issues with winter ban, which is what they do here when they say you have to get off the roads. No joke. And then I think, what was the next one? I don't remember what the reasons were that we had for the next one, but all 3 of those got approved. The next one was basically the same ilk, bigger. Oh, that was the one we were planning on starting a family. And the school district that we wanted to be in, that was when we found out that one of the ones we were looking at was in a different school district. We're like, we prefer to be in that school district. And then, what was the other? There were a couple of other reasons. But yeah, yep, that was definitely one of them. Robert Farinelli, do they actually check the neighborhood? I'm in one of the nicest ones now, LOL, unless I find a Victorian home in the historic North End. Well, nicer neighborhood is it's you tell them why the new neighborhood's nicer, if that makes sense. Cody Evers, thanks for the time, Matt. Have a good one. Thanks, Cody. Thanks for hanging out with us. Laura Samaniego, Matt, thanks so much for the encouragement. I'm educating myself in everything ADU, scary and exciting at the same time. Thanks so much. You're very welcome. I can honestly tell you, like, ADUs, what a huge colossal pain in the tail. I think he's 10 months in and like 8 or 9 grand in, and he still hasn't moved a shovel of dirt yet. I have an ADU that I was going to do, but I haven't started the process yet. We were going to start it a couple of months ago, but I was just like, no, we're too busy. So I'm actually now going to start the process probably sometime in July on that. Sam Farho, dropping gold, lumberjack. Guys, hit the button. Sam Farho, I appreciate you, my friend. And I agree. I think I am dropping fire. Dropping gold, throwing fire, 7 different kinds of smoke. It's awesome. Robert Fairnelly, my reason for moving too close to the airport, it's annoying. Yeah, but will they tell me to just move back to Nashua? Do I have to explain it? No, just the current situation of where you're at. Yep. I'm too close to the airport. I'm a light sleeper, and this, I want to be further away from the airport. And, that can certainly be one of the reasons. Look at the school zones too. That's something to also consider as well. Because if I said more bedrooms, they might tell me to move back to Nashua where you have a 4-bedroom. Yeah, but you're rented, so you can't do that. Santee, question, what type of trust do you recommend? Is it in a revocable trust? In a sue, a judge can force you to make change of the trust LLC if you own it to only your name. The LLC protection can be bypassed. No, so mine is a revocable trust. Yep, it's a revocable trust. I tell my attorneys what my strategy is and what I want to do, what the goal is. It's their job to find the best vehicle to put us in based on what our current strategy is and where our future growth is going to come from. I don't overthink it. I'm not so arrogant as to say, I know more than you, you're an attorney. They understand the vehicles. Same with my enterprise or my enrolled agent, who's basically a step above a CPA. Same thing with my enrolled agent. I'm not going to argue with him. I tell him, this is what the goal is. What's the best way to structure this? And then he'll ask more questions, and then I give him more input, and then he gives me more data. So yeah, that's really the key for sure, is that, back and forth with the people that I am paying to be the experts. the question that I always ask in any of those meetings is, can you tell me a question or two that others have had of you that I haven't asked today? Like, what might I not be thinking of? Because I've not been through this experience before. And you'd be surprised. Usually going to get some good answers then. So yeah, Santi, you're welcome. Tom Kind, I want to do it faster than Dion. I just want to do it faster than Dion. Yeah, what faster than Dion? Yeah. Adam, why haven't you quit your 9 to 5? So I said this a little bit earlier in the presentation or in a show. I've got a couple things I'm transitioning in the company, and I really want to do those things before I decide to give them a time frame where I can say, hey, in the next 60 days, 90 days, I'm ready to leave. I just want to make sure those things are done first, because then I'll feel like the company is positioned to move forward well after I leave. I don't want to leave anybody in a lurch or in something where I'm mid some, readjustment or realignment or things like that. So for me, it's just making sure I'm not only just leaving on good terms, but leaving the company in a great place where it can still thrive. So that's why. That's the only reason why. Elise, fire me, please. By the way, I love your name, Elise. I think it's awesome. Thank you, Three Amigos. You're very welcome. Yeah, I'm happy to do it. I'm really excited. We're going to do something in Vegas with the guys. Mike's got to get to 50,000 subs. I think that's the first event, and Dan and I want him to pay for it. And if it's a 50,000 sub celebration, that's what we'll do. I don't know if we'll get together. I'm trying to do a vacation out there, but we've got some horrible family plans that I don't want to be a part of, but I have to be anyway. Roldan Crespo, I am late to the party, so apologize if it's already been asked. Roldan, you're all good, my man. Roldan is one of the originals, the OGs. So I'm happy to do whatever you need me to, my man. On a market that prices are already dropping 10% and listed 20 plus days, would be too aggressive. For example, asked if sellers to cover all closing costs or buy down 2 mortgage points, roof replacement price discount. I don't think so. I mean, if you're the only offer, hell no. If you're the only offer, nope. I don't think it is at all. Somebody offered me, so it's a private deal. Somebody offered me this private deal, and I was like, this deal sucks. If I did this deal doesn't trade for this retail. Why on God's green earth would I pay you more than retail on an off-market deal where on top of that, you're not paying a realtor commission? Nah. Nope. Hard pass. Yeah, I don't think so. I think you have to decide. Maybe you give them a structure of, I'd like you to decide, and you kind of figure out, we would want these 3 things or these 3 things. So I think that and I would just want to make sure that you just understand what that real cost is, right? Because at the end of the day, you're really just going for a discount. So just make sure you understand kind of what that is. Yeah. And then just justify the discount that's being requested, Yeah. Yep. Roldan Crespo, seen lots of price drops on medium prices in the Atlanta area. Yep. Therefore my questions. Yeah. Yep. It's coming. I mean, I know that Atlanta is passing a bunch of new rules. Atlanta and Georgia. I think a lot of it's Atlanta based, around like Airbnb stuff and things like that. And so people recognize that if there's been a bunch of Airbnb that's bought up a bunch of the supply and was overpaid for the supply because the returns on that Airbnb were awesome. A lot of those people were running at 80%, not gonna be running at 80% anymore, 50%, 60%. And now being a host and cleanings and things like that start to get expensive, where if it drops below, like depending on the model, if it drops below 50%, some people might actually be, and they're, cost model wise, they're better off going long-term rental, but they might not be set up for that. It might not, but that's still, it's a pivot. it's not like it's rocket science, but there's going to be opportunity there. But then there's also going to be the issue where people are just like, nope, maybe that long term doesn't make sense because the rate was too high or whatever. And then they have to sell the property. So yeah, I mean, I'm seeing inventory come on, but 3 open houses this last weekend for a couple of brokers I know. All 3 of them are under contract. It's Tuesday night. All 3 of them are under contract. All 3 of them are over ask. Median houses. So, and again, New Hampshire is 73% of people can afford, on the median income, can afford a median home. Robert Farinelli. All right, time to make my list of a million excuses I can try next year. Exactly. Totally, dude. Absolutely. Spend some time in some chat rooms, like look and see what their reasons were, and then see what you can back into. That's not a lie. Like for me, I'm big on just not lying. And so I'm going to throw that out there, and I'm going to, it's going to be justified. Roland Crespo, by the way, thank you so much for covering Dion's tonight. Yeah, dude, I'm all good. Yeah, I'm happy to do it. I love spending time with you guys, and hopefully I can help you. Ryan Allen, hello. All finally made it. It's been busy at work. Ryan Allen, did you get that? Did you get that email that I sent you, Ryan? Make sure you let me know, my man. I want to make sure that you got that that wholesale deal. I want you to tell me, is that a killer deal? It looked like, not knowing your market, it looked like it was a killer deal. But tell me, Angel R, do you approve polymeric sand? For what use? Yeah, tell me what use. Ryan Allen, ask for the moon. The worst they can say is no. Exactly. Llcs, fire me, please. 3 amigos are the only reason why I finally signed up for YouTube. Thank you. I wish I knew you guys sooner. Yeah, I'm glad. Hopefully we were helpful. Roldan Crespo, thank you, Matt. The approach will come across respectful. Yep. More convincing to support the purchase offer. Yeah, I think that you can't go wrong. I think you just justify it. One of the things I said was, I need to understand from you, would you prefer to replace the roof and clear out the basement? Or would you prefer for me to ask for a credit? I've asked that in the past too. I prefer to pay a little bit. I prefer to get a credit, pay a little bit more for the roofer because they're not like running out the door, and get a great roof install and know that it was done by my guys. And so I would prefer to ask for a credit, even if they aren't covering the total cost. David Yang, buyer activity doing well in my markets. I like it. Yeah, mine too. I thank you for sharing. I appreciate that, David. Keith Hager, ask your realtor to set you up and email links to days on market over 60 days. They can send the links and you can check out who is ready to sell. Yeah, so that's for sure. Yeah, days on market's definitely a really important metric right now. There's a lot of stuff that still doesn't make it 60 days though. There's people in there that are looking at, 2 weeks and 3 weeks and 4 weeks. You're not going to see a lot get to 60. They're going to get pretty hammered. Yeah. David Yang, summer performing well for sellers listings if they are priced right. Yep. Yeah, still wish pricing for sure. Shared a story earlier on a Vegas deal that we looked at. Like the price is just ridiculous. It was absurd. It was just dumb. For those of you guys who are on the chat now, I see about 60 people watching. Make sure you check out my landlord review series. I'm going to put a lot of time, effort, and energy into that. And I'm taking you through all the products that I use as a self-management landlord. Hopefully, I expect it will help you, but I also put the links to the products that we use and the prices that we pay for those things. Make sure you check out that series. I think you won't be disappointed. And I think my videos are usually on that series. They're about 10 minutes long. I think I've done 5 so far. So in less than an hour, you can likely find a property or a product or a tool that will drastically change the game for you with less than an hour of investment of your time. So take a look. And like I said, I've already done the shopping work for you. I've already found a link where whatever that product is, you can purchase it, and it's right off of Amazon. And who doesn't have an Amazon account? Everybody. I think everybody has an Amazon This winter and fall is going to be interesting, and next year as well. Yeah, I totally agree with you, David. Yep. I'm very much, I got my popcorn ready. I'm ready to watch. Gary Lee, you guys always say to never buy alligators. Does that mean you'd never be okay buying in New York City, DC, or Seattle? Yeah, I don't buy to brag about where I own. I buy to brag about how much money I make. Yeah, I would buy, I wouldn't, me personally, I wouldn't buy in any of those cities ever, ever, because they are anti-landlord. All three of those cities are massively anti-landlord. So I have no interest in playing there ever. Um, One of my main criteria for market selection, I moved to where I um, was the state government and the local government, and how they, and are they anti-landlord or pro-landlord? Yep. So I would never invest there ever. Angel Art, do you approve of polymeric sand to restore brickway and prevent weeds growing through cracks? Thank you, sir. Yes. Yep, I do. I actually like polymeric sand a lot. So we have it, we've put it in a few areas. The Yes, the one thing that I would do is in using that is I would still use whatever you're using for a base. I would still use some sort of a base that is a blocker, like a weed blocker. So it's still, because I still get weeds in some areas where I have polymeric sand. Believe it or not, it's weird, but we still have areas where we get some polymeric sand, or where we have polymeric sand. So I would just make sure that underneath you're using some sort of some sort of a retardant, some sort of like a weed blocker, and double up on it. And that's what I would do, Angel. Hopefully that helps you, my man. Ryan Allen, sure did. Looks interesting. Need to look into the zoning to make it a multifamily and how much work it might need. Yeah, let me know. I want to know if that turns for you, because like I said, I looked at that deal, and the fact that it's being used as a single family now. If you watch kind of like an hour into this video, I talk about a deal that I did. It was all based on zoning. Man, it was a home run. And that deal feels a lot like that deal that I did, where I have zero money. 6 months after I did that deal, I have zero money in it, 35,000 bucks in my pocket, and it cash flows 1,600 bucks a month. So I'll make 20,000 bucks a year on that property for the next however long I own it, but I got paid 35 grand and I have $0 into it. Yeah, but totally agree with you, Ryan. Let me know. Janelle Diaz, thank you, Matt, for hopping on tonight and for all the golden advice. We'll hopefully post the duplex in the Facebook group soon. Very awesome, Janelle. You're very welcome. Appreciate your help and your questions. David Yang, I think I'm buying commercial versus residential this year. Any commercial real estate people in the chat? I'm a commercial real estate guy. I do commercial. I hate it. I hate commercial real estate. Like real legit commercial real estate. I hate it. I hate it. Yep. David Yang. Oh, no. Evolve Properties LLC. Chris Brown answered all our 1031 questions. Matt, appreciate your connection. Here's to turning 1 unit into 9. Shut up. Really? Good for you, Evolve. So guys, Chris Brown that Evolve just gave the shout out to, Chris Brown is a 1031 ninja. He is the dude. I'm going to have him on my channel. He works for a law firm that only does 1031 exchanges. That's it. And they do them all over the country. Did Chris remember me? He should have. It's been like a year since we've done a deal together. We've talked a few times in email, but I'd love to know if he actually remembered me. Jason C, Angel R, it's worked well when I used it. Yep. Jason C, yep, exactly. Yep. Mandy W, I'm loving the landlord reviews. Good stuff. Thank you, Mandy. I appreciate that. Yeah, more to come. Tomorrow I come out with the handle video. Guys, I crushed it in that handle video. I found my vendor that was a newer vendor on Amazon. I found a newer vendor that the handles, even up to 14-inch handles, are less than $1 a piece. Oh my word. Like, I think I just did an entire kitchen handles, an entire set of handles for the entire kitchen. I think I did for less than $30 using those handles. I'm telling you, you got to watch the handle video tomorrow. It will crush. And that other pipe cutting video was awesome. That pipe cutting tool. In fact, I have it right here. This is the pipe cutting tool. It's the bomb. This thing is awesome. Literally just get it right up to the pipe and you press the button. And it cuts the pipe for you, so you don't have to be there with that silly little one. That thing. Just did a review on that. That product kicks. If you're a self-managing landlord, you gotta have one of those, because if you can't get your plumber on the line and your tenant needs water, that's the way you get the water back. That and a shark bite. Yep. Killer product. Ryan Allen, let me know the details of it. I mean, if I can't be the money, I might be able to find you the money. I don't do money like that. I just never have. I never will. Just because I am crushing it. Yeah, LV teach me less than $1. And here's the quality. Isn't that nuts? Less than $1. You will not find, I mean, we've got hundreds of these things deployed, hundreds. And check them out. That's like me working that piece pretty hard. It's not breaking off. Like, I'm telling you, that video is going to save people I would go through and literally redo the cabinets that I have with these handles to bring it more high scale, because you can do it for like $30. I mean, damn. Less than $1. No joke. I'm not kidding. Less than $1. Yep. Less than $1. Just saying, less than $1. Man, and they're, I mean, it's a pretty handle, but that video goes live tomorrow, 9 a.m. But I've got all the links in there. In fact, I got you my vendor that I used that does 4-inch, 6-inch, 8-inch, 10-inch, 12-inch, 14-inch, and all of them are less than $1. I think you have to buy 30 quantity in them, but watch the video. I go through all of the different, how I measure, how I picked handles, the design that I use for the handles, because like lower cabinet handles, a lot of people still put like a bar like this on a lower cabinet handle. Well, when you bend over, you're not grabbing them here, you're grabbing it like right here. So I turn it like this on the top of the door, gives it a totally different look. And then you just boom, then you can like grab the edge right here and pull over, as opposed to just grabbing the top here where you're always putting pressure on it this way. I'm telling you, watch that video tomorrow, 9 a.m. That thing goes live. It's an absolute crush there. Absolute crush. Mandy W, loving the landlord reviews. Awesome. Angel R, his house flipping tricks and tips playlist is great. Thanks, Angel. I appreciate you, my man. Yeah, it's really good. I won't lie. I mean, that's after you guys, that's after 50 or 60 something rehabs that I've done, 70 rehabs. That's when I started recording them. And so we have specific products. I walk you through everything. Those outlets, those special USB outlets, I'm going to show you those where we buy those in bulk. So I think we end up paying, we pay like $7 or $8 a piece. Special GFCI outlets that we use that are still UL listed, but how we buy those, because you walk into a Home Depot and buy a GFCI outlet, it's going to cost you $30-$40. I think we pay 10 or 12. And you're going to need those. If you ever redo a kitchen, you need at least 2 or 3 of those. If you ever redo a bathroom, you need at least 1 or 2 of those. So that's something where you buy a box of 10, you stick them on the shelf, and every time you redo a bathroom or kitchen, that's usually the way I look at it is that's like, okay, if I redo 2 kitchens and 2 bathrooms, I'm going to need all of those. And if you do like a boiler that's plugged into something, for sure. It's awesome. So thanks for saying it, Angela. I appreciate you. Santi, let's say you just moved to another state and starting from zero, which steps would you make to be able to focus on and understand what markets show the most yield? So I would, if I were just moving to a new state, I would have already done that research. I would have done the research and I would have moved. I would have gone to, because so long as I would have been like, if I couldn't work from home and I had to work from an office, so long as I was within a half an hour of the office, whatever direction, I would look at, I would be looking at those areas, but I would have done that research over like a 60 to 90-day period to know where I want to move. If I were moving to a new area like that, in all honesty, I wouldn't buy a single family home. I would house hack. I would buy a fourplex because I don't know how long I'm going to stay there, but I would have my family in that fourplex. And then if I ever decided to leave, I could always hand it over to a management company. But I wouldn't buy a single family home. That's how I would do it. But I'm like that. Ryan Allen, want to be the money in deal? No, I don't have much to work with at the time, but still saving, all good. I can probably hook you up with the right people. So look at the deal and send me an email back and even send me the pictures. Like when you go in there, take a bunch of snapshots. Because you'll be able to get in there and take a look, I think. Angel Art, what has been your favorite house hack? Fourplex, duplex? I know Dion is big on side-by-side duplexes. So I love side-by-sides as well. I don't own any over one overs. Those are more like row housing type of stuff in like Manchester has a lot of those. All of my triplexes were 1/1s. All of my duplexes are side-by-sides. None of them are 1/1s. They're all side-by-sides. I think I probably like duplexes because it's fewer kitchens. Kitchens are expensive. I mean, I've made them as inexpensive as I possibly can. If you want to ever see what one of my kitchens looks like, look up 2 Whittier Falls Way in Dover, New Hampshire. Look up 2 Whittier Falls Way in Dover, New Hampshire. You'll see exactly what my kitchens look like. Yeah, I did those, and I think they're killer. Santi, nice handle. That's what she said. Appreciate that. Yeah, it's an awesome handle. Andrew P, thanks so much, Matt. Heading out. We'll finish the live tomorrow morning. No problem. Thanks, Andrew. I didn't think you thought I had lice. I mean, I did just show my hair, but you said it before I did that. Laura Semaniego, I look forward to each one of your product reviews. I've been looking for this information for the longest time. So appreciate it. You're welcome. So the only thing that I'll say about the additional thing I'll say about the product reviews is these are products that I use daily. My tenants use them daily. We went through products that we tried, tested, failed. And now these are products that we've used for anywhere from a couple of years to 10 years. And so it's got use on it. Hands-on landlord in the field, touching the product, talking to my tenants, getting the complaints, seeing the maintenance requests. This is what the depth and breadth of that knowledge is valuable to you guys when we're picking product, is because I'm not doing it because they're sponsoring me. I'm sending you that direction because that's what I use. That's what I've been happy with the performance on. And that's what's going to, I think, make it less expensive and more efficient for you to run your business. So I appreciate you saying. Robert Fernley, hope they don't start going up in price. I don't think they will. I mean, they probably, I mean, again, I think the only downside is I think that they usually take a couple weeks to show up. But guys, like, be better planners. Like, if you're going to plan on doing a kitchen the next couple of years, if you spend $100 on handles, if you bought for one kitchen, you're going to spend more than that. In fact, I did the math. If you buy for one kitchen, normal pricing, you're going to probably spend $200 on handles. So when I buy handles, I spend I probably spend $200 or $300, but then I'm good for like 18 months. And we've had like 3 of those break. So it was a super easy replacement and I knew what the match was. Yeah, so far it's been really good. I know that they've run out of product before and I've had to wait 3 months for it to come back in. So that's the only thing that I would caution you guys on, is that's why I overbuy. I have them sitting there on the shelf and I just go grab them. Hope Monica Galdamez. Hey Matt, any luck finding a house in Vegas? Any recommendations? We want to buy a house there. So Monica, I am looking specifically in Summerlin and I'm looking in Desert Shores. Those are specifically the two places that I'm looking. Definitely have not bought one yet. I'm only about 30 days in. Kind of looking at things, just kind of getting a feel for the market. I look at my searches daily. My recommendation, Brian Lebo is your agent. I don't know what price range you're looking in, but Summerlin is pretty pricey. Desert Shores is really pricey. So yeah, it depends on those things, but no, haven't bought anything yet. Haven't spent nearly enough time doing research. Not nearly enough. The only thing I hate about your USB outlets is no USB-C, just USB. Yeah, but USB-C is much more expensive. And I like and the USBs are good enough. They're good enough to make sure someone's phone doesn't die if they're hanging out in the kitchen or whatever. But yeah, the USB are you talking? Yeah, the C version ones. So just USB into your phone, or you're talking about the supercharger ones. David Yang, why do you hate commercial real estate? Because the whole build the suit thing, it just annoys the bejesus out of me. So many, like, what is it? 90% of businesses fail in the first couple of years. So I built it to suit, and that's almost always sunken cost, and places that you think are going to be great suck or whatever. And you can try and sue them, but it is not an easy process to then sue them and try and get the money back. And then, oh yeah, well, the company was dissolved. Like personal guarantees, like that's pretty rare that you're going to get that. So yeah, I just much rather have something much more easily transacted, because my premium on residential is even better than my premium on commercial. And the idea that, for the number of units I have, I spend very little time based on the number of units that I have managing things. And I know that the reason for the commercial side too is if it's retail, that's really hard. You have to fix things like near immediately. That's not easy. That's more of a pain in the ass and more of a headache. Residential, if it's not critical, even in appearance, it's something you can turn around slower. Daniel G, Santi, thumbs up. Thank you. Daniel G 86, two-part question. I think it will cost me $400,000 to build 2 units, 1 bed, 1 bath each. After construction, I'd have $961,000 in debt, rental income of $67.15. Should I build it? It depends on how that compares to the yield of another deal if you put that same money into that deal. Let me know if that makes sense to you. Sam Farhill, thanks for taking the time, Matt, to go live for Dion this evening. Now, guys, it was my pleasure. Truly appreciate you guys coming and hanging out with me, because without you, I wouldn't have been here very long. I would have just walked in the other room because I wouldn't have had any questions. So thanks for coming and hanging out. Robert Finley, what triplex row houses, LOL? Have seen those in a while on the MLS, or all triple deckers? Yeah, triple deckers. So the 1/1/1s. I was on Pearl Street. And I was on Bartlett Street. Yeah, I hated them. Hated those buildings. Yeah. Which the problem is that the 3rd floor is hard for boiler, either electricity, heat, or furnace in the attic if you can. Worse yet is those older ones had like parlor heaters. And so I got rid of the parlors and I put in Renais. But still sucky nonetheless. Daniel, current mortgage rate 3.65, new mortgage would be today's rates. Yeah, totally agree. So I would look at it's everything there is a math-based decision. Everything there is what's the return, because if you can start to see a discount, because rates are going higher, and you can find better return and not building. To give you an idea, if I'm going to build something, it better give me a much higher return than my ability to just go buy something. Does that make sense? Problem that is if you don't know which size handles you need, I'm not even 100% sure the exact layout of my new kitchen 6 months out. Yeah, but you, if you bought, so as an example, in all likelihood, you know the height of them. Okay. And if you know the height of them, then you know just by doing the math, follow my video. If you understand the height of them, you'll be able to certainly pick the uppers. And then you're using the same calculation for the lowers. So in all likelihood, if you buy, like, if you know that you're using 30s on the uppers or 32s or 36s, you can figure out what your upper handle is going to be. You're going to likely carry that down to almost all your cabinets and drawers down below. So it's not, even if you got, like, as an example, if you're doing 36s, I'd probably do at least a 12-inch handle. So it's a third. So I do a 12-inch handle. So I got that all for my uppers. And that means for any of the 24-inch drawers, I'd probably also use a 12. And on the drawers, I do like a half number. On the uppers, I use a third. And so, yeah, it's not outlandish. It's not really impossible. And again, it at least gives you kind of the core, because your uppers aren't going to change. Your upper heights aren't going to change. And when you're buying them, you're not buying them onesies, you're buying them 30 at a time, because I think a bag is like $30, but it's free shipping included. So Robert Farinelli finding a problem. Come on. Million. Hi, Matt. Hi. Cool name. Million. I like it. Robert Farinelli. I bought a quick charge, one USB and one USB outlet 5-pack for $15 because a lot of things are USB-C these days. Yeah, but still the other end of the cord's USB. So it's USB then to a C. So they'll still charge fine. It doesn't have to be USB to USB. It can be USB into a C. Tom Kai. Explain to Mike Zuber how to read comments and questions aloud like you do, and also have him not mutter halfway through. Yeah. Yeah, he's awesome. I love Mike. Yeah, but sometimes I'm just like, because I'm like trying to do something, and like then he'll and I'm like, what's the rest of that question? I didn't hear it. I need to know. I need to know. So then I have to stop what I'm doing and I have to look it up. Oh man, that's a bummer. We're almost 3 hours in. If you guys have additional questions, hit me up with them now. And if I've answered any of your questions, you better have given me a like. Just kidding, but I'm not really. You would think that, but nope. Or maybe just my phone. Yeah, just your phone, man. I have one next to my bed, and I plug it into that. Plug it into my phone, and my phone charges no problem. Yeah, I think it's just your phone. I mean, it might be it might be something with that specific outlet. That's the only downside, is that because of, so in these bags of 30 that I get of these, right, you might find one that comes garbage, like the like the nut that they set in place into this might be junk. That happens, but it's like I paid 87 cents for it. Am I going to send it back to the manufacturer? Dear God, I don't have the time to even send them an email. If I got a bad bag of them, yeah, I'd send them something and just be like, hey, that bag was bad. And then you just get a refund through Amazon. Laura Samaniego. Thanks. Good night, everyone. Thanks, Laura. Appreciate you hanging out with me. I was thinking of you when I did that video tomorrow. I know you got some kitchen stuff coming up, but yeah, I changed all my kitchen stuff to this. I love these handles. Love them. Everybody walks in and goes, oh my gosh, the handles are huge. I'm like, yeah, they are. They look freaking killer too. Daniel G. Thank you, Matt. I emailed you. Okay, cool. I'll take a look. I suck at emails during the week because I work all day long and I'm on emails all day long during the week. So usually I check them out on the weekends. Usually. Daniel G86. Ha ha ha. Poor Zuber. Yeah. Yeah. He's funny. Like I said, I love working with Mike. He's a blast. Robert Fairnelly, good idea for kitchen, would take care of most of the cabinets, but I'm going to be adding like 5 to 8 new ones because of the stupid layout. Yeah, again, so pretty consistently, like I said, look at the uppers, but pretty consistently on the uppers, I'm using, because I use pretty consistently, I use the 30s on the uppers, and on the 30s, the 10s look awesome. And you can even do 12s if you want that really bold look, but you're going to go through 10s and 12s pretty consistently. And you're going to go through the 4s pretty consistently. The 4s you go through a lot because there's always like a smaller, narrower, skinnier cabinet that you're going to want that handle on. And the 4s always work on that cabinet above the refrigerator or above the microwave. Now that's where the 4s and the 6s come in. So the 4s above the 4s or the 6s above the kitchen, microwave, as well as above the fridge. That's where those, and above the sink. So that's where you go through 4s and 6s quite easily. Same thing with 10s and 12s. The 14s are a little bit of a stretch. That's more like a special application where you have like a really wide drawer. You like the more grand thing, but yeah, that's why. And I can tell you when I buy them, 2s, 4s, 6s, 8, 10s, 12s, 14s, I just buy a bag of each. I buy a bag of each. And then I kind of saw where I was going through kind of the normal, the most 4s, 6s, 4s, 6s, and 12s, I think were the ones that I reordered a bag of each next. So for what it's worth. Robert Fairnelly, like no counter space near my stove. Yep, sure. LV Teach Me. Thanks, Matt. You're the man. I'll email you. Cool. See you tomorrow. Out. LV Teach Me. Thanks for hanging out. Yeah, tomorrow. What's tomorrow? Oh, tomorrow AM. Yes. Check out the handle video on the Landlord review series. Yeah, I think, like I said, that's something where if you own even a duplex, look at the number of drawers and doors, and even on your vanities. Like these handles look awesome on the vanity doors. They look, like I said, there's just a bunch. Don't use anything outside. Don't get me wrong, but they just really, really, really class it up. Yep, I like them, and especially on like old built-ins too. Very cool. Right now, got to run back to work. Have a great night. We'll watch the whole thing later. Thanks, you, Ryan. I appreciate you. Monica Galdamez. Matt, can you tell me what is your criteria to rent your properties? I got a property in a new neighborhood. I'm having a hard time finding a good tenant with a good credit score. I will answer that question with a question. What is a good tenant with a good credit score? What's your criteria? And then I can kind of give you feedback. I guess I'm not broken up to buy the handles. LOL. I just have to find a new way to reduce expenses. Honestly, it's one of those things where my worst nightmare, Robert, is that company going out of business. That's like my worst nightmare, because I used to pay $2 a handle, which was still a great price, but I used to pay $2 and $2.50 a handle. It was still a great price, but I used to pay $2 and $2.50 a handle, and now I'm under $1. Oh my goodness. Like, that's why I think my last order, yeah, I want to say it was like $300 maybe. And I think it's maybe 8s and 12s. I can't remember, but I think that was a majority of like 4 6s, 4 6s, 10s and 12s, and maybe not 14s. Whatever it was 4 bags or 4 sizes that we basically bought like 3 bags each of. So yeah, so I've got like 90 handles of each. But yeah, yeah, cheaper than the dealer kit, so I will make it happen. Yeah, yeah, no joke, right? So true. Oh, that dealer kit, man. I know ever since you said that, I was like, I need to get a dealer kit. So I'm actually strongly considering it because I think we're deploying like 3 or 4 more new IBCs this year. So I think that yeah, I think yeah, I think I might buy a dealer kit. Just because I'm concerned about supply chain stuff. IBC hasn't been an issue so far, but yeah, I'm actually strongly considering it. All right, more we're coming up on about 5 minutes left, but if you've got more questions, I will answer them. Dion couldn't even show up to his live stream in which I'm sitting in for him. The hell, Dion. I'm gonna text him right now. Where is he? I got him. Take a picture. Oh wait, here we go. I was like, why am I looking at that? Fun live stream. Monica Galdamez. The criteria that was recommended to me here in California, 3x the rent. Okay. Credit of 640. Oh, that's rough. 640 is not very good. Up 640 and up, no criminal history, no evictions. Yep. I'm renting the property for 2,400. So you're having trouble finding a tenant with that. Have you looked? I was waving to your phone. LOL. Thank you, Neil Collective. That's awesome. That's good. I bet he posted on social media. Then you guys are going to see exactly what my office looks like, which I don't care. Let's see. Julie Anderson, he may be retired and not realize it yet. Yeah, no kidding. Monica, one of the things that I would do is I would talk to Section 8 housing. I would do that. I would talk to Section 8 housing and look at what their rate is for your unit, but you still have the same criteria. The criteria is that they have to have a 650 credit score, that they can't have or 640 credit score, no criminal history, and no evictions. You can still, it's fair to judge everybody exactly the same. And so my recommendation is I would look and see what Section 8 housing is in your area, because there's plenty of good people on Section 8 housing. And then your check comes from the government. So I would look at that. That's one thing that I would do. I'm not sure if you've already done that. You can tell me that you've already done that. And then the other thing that I would do too is I would call the local hospitals if you're close to any. If you're close to any hospitals, I would call their HR department and ask who they use for traveling nurses. And I would then contact those companies. And then the other thing that I would do too is that if you're close to any military installations, I would reach out to there, and Dion's channel is the perfect channel because he did a video on that. And I don't know all the terminology. Dion's much better at that stuff than I am because he's ex-military. But there's a place that you can call on the base that will then give you recommendations. And I love renting to our military. I love it. In fact, I give them a discount. So those are 3 ideas that I would have for you. I am strict with criteria due to the moratoriums in LA City. Oh yeah, are still on until next year. I have a renter that did not pay for almost 2 years. Oh, I'm so sorry to hear that. Yeah, I think if you go, that's where if I think you go section 8, or housing voucher, or if you go military, or if you go hospital with nurses, all three of those are basically guaranteed. They're not guaranteed, but they're basically guaranteed. So if I'm in LA, I want to make sure that I'm renting out where I know I'm going to get paid, because the state certainly isn't going to make sure I get paid. The county certainly isn't sure I'm going to make sure I'm going to get paid. So I'd be looking for something that's more programmatically based, where I know that that check is getting cut. That's definitely that's where I would look. Robert Family, good thing about Amazon is you have to the, oh yeah, they have the credit card with no interest for 3 months if you spend $50 or more. Awesome. But I think I will take the 5% back in Amazon rewards. Yeah, good call, right? Johnny Cashflow Ramirez, sup real estate freaks. What's up, Johnny Cashflow? Good to have you here, man. Sammy Farho. Hi, Dion. Yes. Hi, Dion. What are some questions I should ask a tenant I plan to inherit? Meeting him tomorrow. He's been in the house for 20 years. Oh man. Oy, 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 oy. Johnny Cashflow, send me an email, lumberjacklandlord@gmail. I will send you the letter that I send to the tenants that we inherit. And you can create probably 8 or 10 questions from that. That's what I would do. That's what I would do. Because that was a really thought out letter by me, really well thought out letter by me. Because we bought a lot of houses that we were inheriting tenants. We weren't like, yeah, evict them all. I hate that. I don't think that's the right thing. I think there's plenty of great tenants that you can inherit. In fact, some of my best tenants were inherited tenants. That said, some of my worst tenants were inherited tenants, but I knew after 30, 60, 90 days that they were going to be a great tenant or not a great tenant. And so on the not great ones, we gave them notice. On the great ones, we then entered into a lease with them. Dion says, awesome. I'll listen when I have service. I said likely story. Likely story. So that's what I would do. Send me an email. I'll shoot you back an answer. I'll send you back that document. That way, when you go, when you meet with them, just kind of keep those things in your head, kind of running through those things. Do you? I plan to inherit. Plan to inherit meaning that you've already bought the place or haven't bought the place yet. I mean, the big thing for me is what I want to know is, hey, what's going on with the building? What's going on with the building? And you can also tell him, put him at ease and say, listen, I'm not going to make any fast or hard decisions anytime soon. I want to work with you, see how it is, see how we work together, because that's really the way that I view the tenant landlord relationship, is us working together. If we work together, great. And if we don't, I understand that we'll go our separate ways. We are under contract. Okay, but you're not closed yet. Yep. Send me an email. I'll send you that letter. That's what I would do. I think my letter is really good. Robert Farinelli, I prefer the evening sessions as well, because on Sundays I have to choose between something like hiking Lafayette or staying home sometimes. You don't always win. I understand that. That's okay. Yeah, I won't do Tuesday nights or Dion. I might do Thursday nights. The only problem with Thursday nights is I already do like 3 amigos that day and something else that day. And so it's like, even today, it's like 5 hours of talk time. So the pipes will hurt a little bit tomorrow. Oh yeah, they'll be a little sore. Weeknights are boring for me. Yeah, I understand. I've been in those shoes. House poor. House poor, project poor. And so I would sit at home. Yeah, that was my option. You said it at Gmail. Yeah. So lumberjacklandlord@gmail. Yep. Here was an exact review that I got. Here was an exact review I got on the letter that I sent out. It said, thank you for this. I sent copies of this. I personalized the tenants of the duplex I bought yesterday. I love this. It covers all the important things and asks for the most needed information. Thank you for sharing that letter and letting me use your work. Guys, that's what I'm here for. If I have something I think is better than the mousetrap you're going to find somewhere else, I want to help you out. That's where it is. That's the motivation behind the Landlord product review series. That's the motivation behind it. I want to make sure to point you guys in the right direction and talk to you about products that I'm using that I'm not being paid to talk to you about. So yeah, none of those guys sponsor me, but those are the products that we use in our rentals. So yeah, you send me that email, Johnny Cashflow, and I will hook you up, my man. All right, it's 10:05. Any other questions? Or forever hold your peace. And if you're here and you're watching and you haven't given me a like, that's not very nice. Some would even say it's rude. Yeah, tomorrow, 9 a.m. 9 a.m. is when that video hits. 9 a.m. Eastern time. The handles video. All right. You guys have all had your chance. It is 10:05. I am calling it a night. So thanks so much for having so much fun with me for the 85 likes. Oh, REI with Alex. Has it been difficult for you to balance having a 100+ unit rental portfolio and dating your J job? Yes. Yes, it has been. Yeah, we finally brought somebody on just to kind of help with some of the maintenance requests. So yeah, it's been a challenge. But we're making through. We changed over, like everything was big for us. Like we did 10 deals last year. We sold, or 10 buys. We refied 9. We sold 3. This year we bought 6. We're under contract on number 7, maybe number 8. We've refied 11, and we're gonna have 1 coming up for sale. So I didn't think this year was going to be as busy as last year, and it's already proven to be busier. So yeah, in that growth, there's some growing pains just from like, I have 400 tenants now in 117 units. And so yeah, just some like kind of general, just kind of growth pains because I'm inheriting tenants and I want to give everybody a chance, but some of them are just professional excuse makers. And that's fine. Like we'll just go through our process and, give them the chance to leave. And if they don't want to leave, then we'll evict them. So yeah, it's been a challenge, but we've still done pretty well. So yeah, definitely a challenge. But great question, REI with Alex. Angel, thank you for another great live. God bless. Thanks, Angel. You're the man. Johnny Cashflow Mirrors, I made it just in time. Yes, smash the like button. Thank you, my friend. Keith Hager, best info tonight. Cool. Fireplaces in buy and hold. Nope, I will watch for that. Yeah, fireplace, you got to be careful. Literally just ask your insurance company. Hey, if I have a rental and I have a fireplace in there, how much more is my rent? Or how much more is my premium? I guarantee you it can be huge. So yeah, definitely check it out. Robert Fairley, nah, I won't make you go until 6 a.m. Thanks for the stream, man. Thanks, Robert. Monica Galdamez, thank you so much for your time. You're very welcome. Hopefully that was helpful to you. Greg Middleton, hey, Greg. Thanks, Matt. You're very welcome. Tom Kind, thanks. Tom, pleasure to be your co-pilot and not have any of the responsibility or the work. So I appreciate you. Chester Williams, holy cow, Matt is on late. Nice. Chester, you didn't watch. Chester, we're buddies. We're buddies. Yeah, I've been here since 7 a.m. 7 p.m. not 7 a.m. I've actually been in this office since 7 a.m. That's the first time I walked in this office, which is also my studio. But yeah, 7 a.m. was the first time I walked in. So now it's, I don't know, a little after 10 and I'll be walking out. Neo Collective, thank you for all the knowledge. Have a great night. Neo Collective, you're very welcome. I really appreciate you guys. I'm glad that the information was helpful. Check out my live stream Sunday at 11:30 a.m. Eastern time. I'm probably gonna be moving that to a night during the week. I'm just trying to work out with Mrs. Ashley, or Mrs. Lumberjack. Oh man, that's awesome. Awesome. Dion, send me pictures back now. But yeah, I'm working out with Mrs. Lumberjack on what night's good. I actually asked her if she would be a special guest tonight. She told me no. I'm like, seriously? She's like, yeah, I don't want to do it tonight. I was like, why? She's like, I have so much stuff I got to do. I was like, all right, fine. Okay. I'll just go do it myself, I guess. Chester Williams, I was in late meetings. All right, I suppose that flies. Chester, what do you think? I know you'll give me an honest opinion. What do you think about the landlord product review videos? I know I just can't say goodbye to you guys. Ow. Ow. And if there's a specific, not a specific product, but a challenge that you're having and you're like, hey, you know, what product do you use for this? I'll do that. I won't review a product for you. I won't do that because any of the products that we've picked and selected, any of the ones that we've picked and selected, we have used in the field extensively and we know the quality of it. So we know that like if you get a bad one, it's because you got a bad one, not because the product's bad, if that makes sense. Chester Williams. I know this was a good stream, hoping on 3 hours later. Yeah. Everyone check out Matt's product review series. Oh, thanks. It's worth its weight in gold. Appreciate that. I appreciate that. Chester watches a lot of the Three Amigos, like a lot of you do, but he watches a lot of the Three Amigos. And so I always like people's feedback. I forget what's coming. So we did handles for tomorrow. I did the cutting tool earlier this week. Oh, shark bites. Somebody was brilliant and said they didn't know really what a shark bite was. So they suggested I do a video on shark bites. I'll talk to you guys about what shark bites are. So you actually get the other end, what I call the business end of the pipe cutter. I'll make sure to share that with you guys too. Yeah. Just got my digital business card after your product review and it's a game changer. REI, tell me more about that. I'm sorry. I got to keep on going. I want to know more about that. That is so good, man. I love it. I love it. Yeah. Guys, I honestly don't know what I would do without mine. Yep. I don't know what I would do without mine. So important. Oh, and the big video that's going to hit tomorrow, guys, is the banking video. I got a bank to make a lending product for me. No joke, not joking. A bank made a product for me, a borrower or an operator. I show you exactly the things that I discussed with them in that video, step by step. It's a 3-page PowerPoint. It's awesome. It's just awesome. And I talked to my bank and I said, I'm going to put this out there just so you know. And they're like, yeah, that's fine. And if you're in New Hampshire or I think some part of Maine and Massachusetts, you can utilize that loan product. But that product was made between me and a banker, basically pitching that to senior lending at the bank, then the board approving it. And now I've actually done 9, 10, 11, 12. I've done 12 deals with that product. 30-year fixed rate debt. 30-year fixed rate debt. Just like a non-QM, except I'm much less expensive than a non-QM. Much less. Yep. It's pretty awesome. Digital business card sounds amazing. Yeah, Chester, check out the channel. It's in the Landlord review series. It'll change your life. In fact, here, so you guys can see mine. Mine's a much more expensive one. It's also branded. You said they lend in NH and Mass. Yeah, you can use it too. So Robert, the only caveat is You're better off with FHA and conventional mortgages until you hit 10, but then you'd have to change to commercial. If Fannie Freddie changes the rules and they bring that ratio or they bring that limit from 10 down to 4, the only criteria that is there in this loan, the only that they can even consider you for it, is that you have met the Fannie Freddie maximum of loans. So you still have 8 more loans to go unless they change the criteria and they drop it down to 2 or to 3. Then you just have to do your next loan, etc. But yeah, that's the only criteria for that loan. But it's 30-year fixed rate debt, and it's about a 1.5 cheaper than non-QM. I'm going to see if I can do this. Come on. There we go. That's my card. The Lumberjack Landlord. Touching. Now, I pay a lot of money for my brand. I, branded it and, all the crazy stuff that I did for my brand. This is a different kind of card than's on my review, but they work identically the same. I was thinking more budget conscious for you guys, just because you don't have a brand. If you do, this card's a great card. I can get you the information on that, but I highly recommend the Popple, Retrieve, or Link, which are all available on the link that I provided in the description of those things. Watch for that. Make sure you do it. Like I said, if you can, when you watch the video, I go over all the detail. I created the link, and then that link is all the different versions that are there. Any of those are good. Yeah. Matthew Pears. Turns out it wasn't a wax ring. Bought a 50-foot drain, 75-foot drain auger and cleaned the drain out. Oh, that sucks. Sorry, man. Wow, 30-year fixed rate debt on commercial. Nice. So 30-year fixed rate debt on all of my deals that are 4 units and under. And once you go 10 units or once you go 10 loans, you're then stuck in commercial hell for the rest of your life for lending, or you go non-QM. The product that we created is you hit your 10 Fannie Freddies, your 11th loan, if it's a 4-unit or smaller, they will carry the paper. They will portfolio the loan, and it can be a 2, 3, or 4-unit 30-year fixed rate debt. And the debt is about a 1.5 less than a non-QM. 0.2 to 1.5. Matthew Paris, same price as after our plumber, and now I can clean out any drain I own in the future. So tired of paying $250 to snake a drain. Never again, sir. Yeah. So for those of you guys who don't know, one of the things that the big box stores are actually good at is they will have a tool in the rental department of a Home Depot or a Lowe's or some of the tool rental places around them. They will have a tool in service for either X amount of time or X amount of uses. I bought a $1,800 powered electric eel snake drain. It's the most amazing device. It's what Roto-Rooter or any of these other companies show up with. I've just watched how they use it. I know how to use it. The different bits on the end, different auger bit sizes. Here's what I can tell you. I've used it if you want to buy that thing, right? That's really expensive, $1,800 to $2,000. No, I didn't spend that. Home Depot, Lowe's, other companies, they service term them, which means after 2 years, they're like, nope, we're going to upgrade it. We're going to get a new machine. That's what they do. They take those and they put them out and they do them at a fraction of the price. I paid $450 for that. Now, it used to be rented out. It used to get used 50 times a year. But when they rented it out, they went through the entire thing, cleaned it all up, made it all right. Every part was replaced, it needed to be replaced. I'm getting basically a refurbed unit for about 25% the price. I've used it since I bought it 3 times in about the last, I think, year or so. So I've used it 3 times, worth its weight in gold. Each one of those calls to Roto-Rooter or a rooting company costs about $600, because a lot of plumbers, they might do a toilet, but they're not going to do like a sewer line. So each one of those calls is like 600 bucks. Even like what Matthew Paris said here, it's like 250. So I have made my money back on that tool in 2 uses, and I'll probably use it once or twice a year for the next however long I do this. So, and more importantly, is my guy has seen how the companies use them, and he's in a position where now he can use it. So before we have to make that $600 phone call, he can do it. He can pop a toilet, he can feed it down the line. It's pretty awesome. Vever 50 half-inch cable, brand new in the box, 200 on Amazon, worth weight in gold. Yeah, that's a good one. I like that one. I like Milwaukee's. I really like Milwaukee's product. It was a little bit more expensive, but only a little bit more expensive. And I like Milwaukee tools a lot. Almost everything I have is Milwaukee because they have the best depth and breadth, like around their plumbing crimping tool. I'm going to show that to you guys. Unless you have a lot of units, don't bother buying it. But I'm going to show it to you because we have it and we use it. But that one tool probably saves us about $4,000 a year in plumbing expenses. It saves us a lot of money. Yeah, it's about $4,000 a year. So every year I could more than buy one of them. I could buy a couple of them a year with the special extensions. But I'll show you guys that tool. I think that's probably next week. Yeah, I think that's next week because I think we're doing outlets next week and some other stuff. Oh, shark bite. Yeah. Yep. So cool. Awesome, guys. It's been so much fun hanging out with you. I really appreciate you. Dion appreciates you. I know that. I know he's thinking about all of us as he's up in Alaska, enjoying his day. It's still sunny there and beautiful based on the pictures he's sending me, unless he's having them significantly darker. He does edit. I don't. But guys, thanks so much. It was great spending time with you. I hope you guys have a great night. Great hanging out with you. If you haven't hit the like button, please hit it on your way out. 2 major videos coming out tomorrow. One is my continued effort in the landlord review series for cabinet handles. And number 2 is the how I got a bank to create a lending product for me. So yeah, hopefully you guys find value in that. Please check them out and make sure you add as much information as you want. Matt Herbert, there you go. Good night, Matt. Thanks for the great info. You too, Matt Herbert. In fact, I think Matt Herbert might be using that product sometime soon. I know that you were close last time. I think you were just buttoning up your next deal. And then I think you're using that other product, which has been awesome. Thanks, been great. So I appreciate y'all. Have a great night. And we'll talk to you again on, excuse me. We'll talk to you again on Sunday, but you'll see the videos tomorrow. So everybody, thanks for coming to my Dion talk.